where we are right now is a market that has a lot of expectations baked in.
Earnings are at a record high and going higher.
Wall Street is willing to bid your stock higher if you're showing the top line growth.
Earnings growth is going to be the big lifeblood going forward.
Stock prices follow earnings.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, waiting for the big announcement.
Won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice.
Investors expecting the White House to nominate Kevin Warsh, sending equity markets inching lower and bond yields inching higher as the path to Senate confirmation remains closed for now. It's decision day in Washington.
It's decision day for the president. It's not necessarily decision day, as you were just laying out, for Congress, given some of the obstacles there. It already has been a decision that's made in markets, which is high skepticism that Kevin Warsh, should he be the nominee, will actually be dovish and deliver to President Trump what he's looking for. This is a Kevin Warsh that has been against quantitative easing, has emphasized inflation through a period of time where inflation was not the preeminent concern, and markets are taking that.
I think we should probably stress at the top of the program, and I know you're going in this direction anyway, that this isn't the pick until it's the pick. And most people around the president will tell you the same thing.
Absolutely. Even if the president comes out, because it's going to be so long for this individual to get confirmed in Congress, given the fact that Senator Tillis has made it very clear he is not moving. He's a senior member of the banking committee. He is not moving till the DOJ investigation on Powell and the Fed is wrapped up. Potentially we can get a president that changes his mind. And right now what you're seeing is the bond market push back. I look back to what the bond market did when Trump chose Powell in 2017. Well, yields fell. Different story today.
The market moves aren't big moves. And I think partly because so many people don't know how to price this. Who is Kevin Warsh? Which Kevin Warsh do we actually get if he takes over the Federal Reserve?
Yeah, do you get one that we saw back in 2006 to 2009, 2010? Or do we see the person who came out with op-eds talking about how there needs to be a complete overhaul of personnel at the Federal Reserve to potentially create the way? But to Anne-Marie's point, how likely is it that President Trump gets up there and says, and I'd like to announce my next nominee, kid? Just kidding, Scott Bessent, come on up. You know, I mean, how much is it sort of what people are expecting?
Scott's looking around the room.
And maybe,
no.
Wait, and maybe
Ixnay on the nominee.
Well, maybe Kevin Warsh can then move to Treasury. That's how you can have it.
Look, I will say this, and I think it's important. He's a former Fed governor, which makes him credible with the institution. And I wonder if this makes it more likely, if it happens, that Jay Powell steps down and isn't there beyond May and gives them a little bit more room to carve the Federal Reserve into what they'd like it to look like.
There were a couple of research reports on this, and they had varying degrees of determination on this. On one hand, people say, okay, this is a credible nominee, so it actually does allow Jerome Powell to step down. On the other hand, should this be a new Fed chair that is determined to reshape the way that the Fed board looks? That might be a different story. You might get some departures, but not necessarily Chair Powell.
Futures on the S&P down about 0.7% on the S&P 500. Coming up this hour, John Stolfus of Oppenheimer as markets await President Trump's pick to lead the Fed. Ed Mills of Raymond James on the confirmation process in Washington. And Dan Ives of Wedbush as Apple posts a record quarter for sales. We begin this hour with our top story. President Trump saying he'll announce his pick for the next chairman of the Federal Reserve at some point later this morning. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, you asked the question, who is Kevin Warsh? And I think the answer comes from the president. He's someone well known on both Wall Street and in Washington. He began his career after graduating from Harvard Law and Stanford at Morgan Stanley, then moved from there to the George W. Bush White House in 2002 as an economic advisor. And then Bush appointed him as the youngest Fed governor ever in 2006. Since then, he's lectured at Stanford, but his primary job is advising the legendary investor Stan Druckenmiller at Duquesne Capital. What does Warsh think? Well, Warsh is a critic of the Fed, a harsh critic of the Fed, has been since he left. One of the reasons he left, he said, was because he did not like QE. He thought it was going too far and it expanded the Fed's remit by too much. He wants them to concentrate on fighting inflation. He has that hawkish reputation that you were talking about, but recently has been talking about the idea that AI is going to give us the higher productivity needed to bring inflation down, and therefore maybe the Fed can do a little bit more. He does want the smaller balance sheet. Now, he could go back to the old system of scarce reserves at the Fed. He says the Fed's guilty of mission creep, and he thinks Fed officials over-communicate. And he's praised Mickey Bowman's reforms for bank regulation, but thinks the Fed could give that role up if necessary. He's also willing to work with the Treasury Department, perhaps a new Treasury-Fed accord to try to keep the economy in as top shape as possible.
Mike, what has he changed his mind about? You touched on it briefly. What's the big one for you?
Well, the big one seems to be he's not as hawkish as he was. I mean, he will tell you that inflation is the key to everything, and the Fed has to focus on bringing inflation down, but he thinks it's more possible. I think that at this point, what Kevin Warsh is telling the president is we can probably continue cutting rates, and it may not be as immediate as you think, but as AI comes online, we'll be able to go lower than other people think. Our star will fall. But perhaps the biggest appeal to the president is the fact that Warsh kind of wants to blow up the Fed and make some major changes in the way it operates.
Mike McKee with the latest. Michael, thank you. The market trying to digest this. We've got bond yields high at the long end of the curve. We've got equities lower by 0.7%. And this is going to be a process, Lisa, to find out if Kevin Warsh gets nominated and confirmed, a process to find out what he really stands for.
Yeah, and if he does really indicate that he does want to cut rates significantly, to your question, what has changed so materially to make him less of an inflation hawk and less of someone who wants to accelerate any kind of wind down of the balance sheet at a time where there has been speculation by a number of different members of the cabinet the balance sheet could be instrumental in getting long-term yields down.
Here's the view on Wall Street so far this morning. John Stolfus of Oppenheimer, the biggest bull on the street, writing the following. Worries tied to domestic risk with regard to Federal Reserve independence and subsequently to monetary policy could cause the stock market and the bond market to wobble near term. John joins us now for more. John, good morning.
Good morning.
Is this the wobble you were talking about, or is this different?
No, this is different. The wobble I was expecting was more, it would be towards someone who would be likely to take interest down more aggressively than less aggressively.
The other Kevin, not this Kevin.
Right.
What's your view on this Kevin?
I don't have a lot of detail on it like most people do.
Isn't that the problem, John, at the moment for a lot of people? We're familiar with Kevin Warsh and his experience at the Federal Reserve. We know what he stood for then. It's difficult to understand what he stands for now.
I think that is because he has a certain amount of provenance with the job, and over a period of time, it's difficult to project where he's going to be. But I've got to say this, when it comes to the people who work at the Fed, economists tend to be of a certain ilk. They are not like sheep; they're more like cats. You can't herd them. And so they're very independent, and I think he'll work well if he actually becomes the Fed chair. You look at Powell's been very criticized. We happen to like Powell a lot because we thought a slower methodology towards ending the hike cycle was better than an aggressive one based on the stickiness of inflation. So when I heard this yesterday or this morning, whatever it was, I've been up for hours already. I thought, well, it worried me much less than if it had been someone that would likely be aggressively cutting. And I think it'll be a thoughtful process.
There's a bigger question here, too, about the response function in markets. Mm-hmm. The idea that equities sell off in the face of potentially higher yields or a lack of rate cuts. How interest rate sensitive is this market, and is some of the record highs that we've seen recently?
I would say from a trader's perspective, it is very sensitive. From an intermediate to longer term investor's position, it's much less sensitive to rates staying higher for longer. And as somebody who's been the 43 years that I'm coming up on in May or July sometime there, have a senior moment remembering when I first reported to a job on Wall Street. I can remember when people were mourning the loss of 12% yields. So rates were still very high early in 83, 84, 85, 86. And the market was going up.
So this is really the conundrum, and I guess that when we look at what's going on with markets and try to understand it, are you saying that longer term it doesn't really matter how much the Fed cuts rates for you to maintain your bullish call?
Yep, I would say so. I mean, I think where we are right now looks to me pretty well normal, related to where you look where the 10-year yield is right now. That makes sense. That's the VIG essentially for loans at the area of around 10 years. to 7 to 10 years. That kind of rate makes sense. The other thing is, ultimately, the only thing the equity market really cares about is revenue growth and earnings growth. And can companies grow revenues and earnings? And it was certainly proven when Volcker was chair that the market, after it got over the recession, it just took off. 1982 was August of 82 was a major rally. And I can remember people had told me, oh, that rally wouldn't last. Well, guess what? It lasted all the way to 87, notwithstanding, normal fluctuations. But and especially with technology today, making businesses more efficient, technology is an enemy of inflation.
But, John, today we do see a little bit of a market reaction.
Oh, sure.
What is it saying? Is the market basically rewinding its expectations that the Federal Reserve would be easier this year?
Yeah, I think they were expecting the market and the market defined as traders, okay? Because it really is. It's your traders are always looking at the short-term effect of this, and this naturally will affect probably positions that were set on an announcement that would have been more aggressive cutting coming up. And so they're probably unwinding some positions, and it's what we've seen in the market over the last. The market discounts both good news and bad news very quickly. It tends to rotate and rebalance. If you watch it the way I do on my Bloomberg screens, one day we're risk on, the next day we're risk off. One day it's large caps, the next day they're giving a bid to smalls and mids. Yeah. Some days it's value, some days it's growth. Last year, the first half was value, and then growth just took over in the second half of the year. It's sort of like the Texas weather. If you don't like it, wait a few minutes.
It's kind of like the month so far as well. January has been its own year. Yeah. John, I just want to finish on the Federal Reserve. Sure. This is going to be a process. Let's find out if it is actually Kevin Warsh. If he can get confirmed, most people assume once that process starts he will be, and how persuasive his arguments will be on the committee. These are all separate things. And things can change very quickly based on one address from Kevin Warsh, if indeed he is nominated and confirmed. But based on what you know so far, based on what you're thinking about, did the strike price for the Fed put just change?
Yeah, it probably changed somewhat. I think at this point, in the sense that I think they were looking for a different story. They were looking for lessening of interest rates, and now likely living more for a longer period of time with the regime that we have right now. A continuation of Powell.
John, it's good to see you. Thank you, sir.
Great seeing you.
John Stolfus of Oppenheimer. Thank you very much. GFC was a long time ago. But a lot of people have shaped views on Kevin Warsh based on what he argued for coming out of the great financial crisis. And if we do go into another crisis, and we are being led by Kevin Warsh at the top of the Federal Reserve, markets will need some convincing of what he actually stands for.
From 2006 to 2011, he was a Fed governor, so leading up to the financial crisis till the aftermath. In 2009, as recently as 2009, when a lot of people were saying the U.S. was mired in this terrible recession, the numbers would bear that out, he said that the balance sheet was too big and they should stop with the quantitative easing at that point, and really pushed back. So if he was still concerned about inflation then, what has changed so substantially? Yes, there is the technological overlay, but how far will that go when you talk about some of the other structural changes?
The institution can change people. I think we should be sort of like thinking about that a little bit more. Think about President Lagarde at the ECB. We're not here to close spreads. Remember that?
Oh, yeah.
It lasted about 5 minutes. And then she had to lean in and close spreads pretty quickly.
Yeah, and look, this is true. And ultimately, if he is convincing President Trump, clearly there is something going on that makes President Trump think that this is a different Kevin Warsh than the one that we're going to hear about from Neil Dutta.
Yeah, I wonder what the president thinks when he wakes up and looks at the price action, but that's another thing. We're down about 0.6% on the S&P. Bond yields higher, a little bit at the long end of the curve. Let's get you an update on stories worldwide. With your Bloomberg brief, here's Yahara Arnott. Hey, Yahara.
Hi, John. We're all waiting with bated breath. President Donald Trump saying he'll announce his pick to replace Fed Chair Jay Powell this morning. Sources telling us here at Bloomberg the president will nominate Kevin Warsh, who served on the Fed's Board of Governors from 2006 to 2011. It will mark a comeback for Warsh, who was passed over for the top job in 2017 when Trump selected Jerome Powell. Meanwhile, President Trump and Senate Democrats reaching a deal to avert a government shutdown. The agreement would fund the Department of Homeland Security for 2 weeks, allowing time to negotiate Democrats' demands over immigration raids. House Speaker Mike Johnson saying there may not be enough time for a vote before government funds run out tonight. And Apple shares are lower 0.6% in the pre-market, despite the company posting record quarterly sales and issuing a stronger than expected outlook thanks to strong iPhone sales, particularly in China. It appears concerns about rising memory prices, supply chain constraints, and weak spots in its Mac and wearables businesses are weighing on the stock this morning. That's your Bloomberg Brief. John.
Hey, Hira, thank you. More from Hira later this hour. Up next on the program, Decision Day in Washington.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning.
Oh. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world.
Up next, we'll catch up with Ed Mills of Raymond James, live from New York City this morning. Good morning. Equities down across the board. We're lower by 0.6% on the S&P, off by 0.75 on the Nasdaq. On the Russell, we're down by more than 1%. Check out the move in the bond market. Yields up across the long end of the curve. 10-year bond yields higher by 2 basis points. 30-year bond yields up by 3 to 4. The focus on the chairman of the Federal Reserve. Under surveillance this morning, Decision Day in Washington.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning.
Oh. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So someone who was on your short list, sir?
On my reasonably short list, yeah.
So here's the latest this morning. President Donald Trump expected to nominate Kevin Warsh as the next chair of the Federal Reserve. Republican Senator Tom Tillis vowing to block the president's nominee until the DOJ resolves its investigation into the central bank. Joining us now to discuss is Jonathan Tamari from Bloomberg Government. Jonathan, we've talked a lot about the man. Talk to us about the process. How is this going to play out down in Washington?
Yeah, it's complicated by Senator Tillis's position because he's on the Finance Committee, which is the first stop for the nominee, and Republicans only have a 1-vote advantage there. So obviously that math is pretty easy. If he is in opposition, the nomination can't get past that committee. Now, the president typically gets what he wants, but the politics are a little bit different here. Tom Tillis is no longer running for re-election. And so while he supported some nominees in the past that he raised concerns about, his political considerations are very different. We've seen that recently. He's been one of the first Republicans to call for Homeland Security Secretary Kristi Noem to lose her job. And so he's got a measure of independence that he maybe didn't have before, and that's going to complicate things.
Jonathan, what do we know about the DOJ investigation? Is the Fed slow walking things? What do we know about any of this?
I mean, it sounds like the Fed has cooperated and that basically we're waiting to see what the DOJ is going to do. What the senator wants is, he says, a conclusion. And I will note that this is probably the issue that I've seen the most pushback from Senate Republicans of anything that's come up publicly in Trump's second term. They are really concerned about Fed independence. That goes back to, old school Republican values about economic values. So I think there is a lot of concern there, and they basically want the DOJ to say whether they're making charges, whether they're dropping the case, whatever it is. They want a conclusion before they move forward.
Jonathan, it's good to see you. Jonathan Tamari there of Bloomberg Government. Stay close. We're all waiting for that announcement a little bit later this morning. Annmarie, you've been tracking this closely as well. The message from Washington is pretty clear. If you want the confirmation process to start, this needs to go away.
Right, which means that the Fed also needs to play ball in this sense. And there are reports that the Fed has not responded to the subpoenas by the DOJ. So Powell, in that sense, could be in the driving seat to really make sure this drags on.
Ed Mills of Raymond James joins us now for more. Ed, what are you telling clients this morning about what Kevin Warsh stands for?
Yeah, so I think the biggest question for us at Raymond James is kind of, will the market test the new Fed chairman? And is the test going to come in the bond market versus the equity market because of his position that the Fed balance sheet needs to shrink? Now, the Fed has already paused the shrinking of that balance sheet to make sure that there is a cap on yields, Jonathan. And so if there is a spike up in yields, once he is confirmed, if he is nominated, he will be confirmed. And so how does he respond at that point? Does he allow for more QE, which he has always been against since he was on the board and after the board? What Kevin Warsh do we get if Donald Trump nominates him? Is it the Kevin Warsh that we knew as a governor, or is it the guy who is going for this job?
Well, he's a chameleon, as Jonathan has said before in the past. Jonathan also said earlier today, this is conventional in terms of this is someone who came out of the institution. But Ed, how is the MAGA base going to react to this sort of nomination?
I think that they are going to trust the president. I don't think that the chairman of the Federal Reserve gets as much attention by day-to-day Americans as we give it in the financial press, obviously. And so I think they'll watch that confirmation hearing. They'll want to see if there is anything in particular that they need to be concerned about. But generally speaking, you are 100% right, Annmarie. This is a very conventional pick. This is someone who's been on the board. This is someone who's worked in the administration. Generally speaking, chairmen of the Fed have had administration experience, have Fed experience, someone that is known by these markets. And so from that perspective, this is a very much in the middle of the road pick by President Trump. This is not someone that comes from the kind of outside of expectations. And so while we might have kind of some market reaction as we are trying to figure out who he will be once he is a chairman, it is not someone that has the huge market reaction of an unexpected pick.
Well, it's so peculiar because I think even the president would say he does things unconventional when it comes to the White House. What is it, do you think, that made him choose Kevin Warsh?
So I think there was a lot of pushback about the potential for other nominations out there. We saw a lot of concern about Kevin Hassert. I think that he does want to make sure the stock market is performing well, that the economy is performing well as he goes into the midterm election year. He cannot have this market down and the economy in recession and expect for Republicans to do well. And so this is probably one of the most high-profile picks that he can make. And he wants to make sure that it is a pick that is well received and well respected by financial markets because he uses the market as a barometer of his success.
Ed, do you view this as sort of emblematic of a sea change right now with President Trump, not just with respect to the Fed pick and picking someone who's more conventional, accepted by markets, but more broadly, some of the changes to immigration policy, more broadly, some of the reaction in response to some of the polling? Do you get the sense that there is a shift right now at the White House?
So, Lisa, I get a sense that the White House is concerned about the political headwinds that they're facing. What I've seen in the past is that whenever President Trump thinks that he is in a political position that is not advantageous, that he thinks that he and he alone should be the messenger. So at Raymond James, we've been responding to social media tweet after kind of social media posts all this month. Because President Trump is coming out with some pretty unconventional or unexpected things. He is talking about affordability. He is looking to do things that get him back on the right side of some of the voters' minds. Those things are kind of a response to a reality that Republicans are facing some significant headwinds as they go into the midterm election year. Now, they're well positioned in the Senate just because of math, but we're expecting to see more of that as we get closer to those midterm elections, because he does not want to lose the majority in the House. He does not want to lose that majority in the Senate.
And it's good to see you, Ed Mills of Raymond James, on the administration and the latest action down in Washington, D.C. Some good news. Are we going to avoid this going into the weekend?
I think it's going to potentially be a small partial one. Not sure if they can make it to midnight and getting this deal over the finish line.
OK. But ultimately, we'll get some economic data in the next month.
Yeah, so I knew that's what you're going to ask me. I think we're getting the jobs report Friday. I'm pretty sure we're getting the jobs report Friday, but we still might have a partial government shutdown.
I'm pleased we cleared that up. We can focus on one thing down in Washington, D.C., the Federal Reserve and the president's pick, and the likelihood that it's going to be Kevin Warsh. Or will it come from door number 5? Like someone you didn't even think of is just going to walk out and stand by the president.
Or someone you did think about for the whole time that has been trying to say, I don't want the job, I don't want the job. I mean, I think that the question that you ask, Annmarie, is will the president wake up, look at this reaction and say, Bassett, come on over? I mean, there is this question about what the market check gives him confidence or lack thereof with respect to Kevin Warsh.
I don't think it's a big enough move.
I would agree.
Just a few basis points at the long end of the curve.
I would agree.
Yeah.
But what did Kevin say to him that convinced him differently?
Do you wake the president up for that? 3 basis point move at the long end of the curve?
Do you think he's sleeping? Do you think he sleeps?
Yeah, as I said that, I thought, the president's not gone to sleep, has he?
He's still drinking Diet Coke.
OK. Dan Ives of Wedgebush joins us next. We'll talk about Apple, a record quarter for that company. It is decision day down in Washington, D.C. We're waiting for the president's Federal Reserve chair pick, and this is how we're pricing Kevin Warsh at the moment. We're down about 0.6% on the S&P. We're down by 0.75% on the Nasdaq 100. Check out the bond market, switch up the board. Yields are higher at the long end of the curve by a handful of basis points, up by 2 on 10s, up by 3, call it 4 on 30s. Not major moves, but direction of travel tells you something about the way the market is thinking about the prospect of Kevin Warsh leading this institution. If you check out the other asset classes, gold down hard, the dollar stronger. These are some of the moves picking up steam earlier on this morning.
If you want to put a narrative to this, Kevin Warsh might be on the more hawkish end of some of the potential Fed picks that President Trump could have selected. This is the reason why. If you want to be more cynical about it, you could say if anyone was getting a little bit concerned about how far some of these rallies had gone in one direction or another, fantastic opportunity to sell. I'm going to kind of stick with the latter.
The takes are funny to me this morning because regardless of who it was, there would have been complaints. Kevin Hassett, sacrificing Fed independence. Kevin Warsh, too hawkish. I think people would have been unhappy regardless of who it would have been.
Yeah, and right now, I think a lot of people are using it for excuses, given some of the incredibly volatile reaction that we've seen in some of these precious metals. So before we come up with the narrative, let's hear A, who it is, B, let's hear what this person says, and let's hear from Tom Tillis about how long this process is going to take.
Exactly, and this process could take a while, let's put it that way. Futures are doing okay. We're bouncing off lows. We're down about 0.6% on the S&P 500. Let's get you some morning moves and cross over to Yahara for more. Hey, Yahara.
Hi, John. We start with the memory chip and data storage company SanDisk. Shares are surging more than 20% in the pre-market after it delivered a blowout quarter. The AI build-out is changing the game for this once highly cyclical business. Executives say that customers are signing multi-year orders now instead of going quarter to quarter because they want to lock in orders at a time when memory chip demand is outpacing supply, something we heard from Tim Cook yesterday on the Apple call. Meanwhile, also a high flyer is Deckers this morning, up 14%. This is the company behind Hoka and UGG shoes. And it was a beat and a raise for the shoemaker. And it's all about pricing power. Executives say that customers are willing to pay full price for their shoes, just reinforcing the idea that for some companies, consumer demand has not cracked. And let's get a check on big tech. We did see some dip buying at the end of the day yesterday after that tech-led sell-off, but there still is some unease out there about how much these companies are pouring into AI. You have Meta down 1.7% after yesterday's blowout rally. You have Nvidia looking to snap 3 days of gains, down 1.3%, and Alphabet also weaker ahead of its earnings next week. John?
Yahara, thank you. Appreciate the update. On our radar this morning, President Donald Trump reportedly set to nominate former Fed Governor Kevin Warsh as the next chair of the Federal Reserve. Sources telling us here at Bloomberg that Trump is planning to announce the pick later on today. The White House and Senate Democrats reaching a tentative deal, averting a disruptive shutdown. The president urging a swift vote as lawmakers still expect to miss tonight's deadline. A short funding lapse and partial shutdown are now the most likely scenarios. And finally, on any other morning, this would be the story. Elon Musk reportedly exploring a massive consolidation of his empire. Sources telling us here at Bloomberg that Musk is considering merging SpaceX with Tesla or an alternative combination with his artificial intelligence firm xAI.
So there have been a number of speculations, rumors that there will be some sort of consolidation, question about time management. A bigger question to me about does he really want to be committed to the car business? Is the car business that interesting to him anymore, given some of the affordability, et cetera? We've already seen the shift to robotics and the sort of emphasis there. How much is he trying to reconfigure himself as a tech innovator in a different kind of way than just electric vehicles?
Right. He's talking about data centers in space, and he wants to bring everything under one roof so that the supply chains and things can work better together. It also comes as you're going to have this massive IPO in the summer, and lots of reporting that this is going to happen around Musk's birthday. Happy birthday, Mr. Elon Musk. But also with going on with the planets, he wants a specific time. So this decision needs to be made likely before you have this IPO of SpaceX.
That is very Elon. The stock, Tesla, at the moment in the pre-market higher by about 2%. Let's stick with tech. Apple shares pairing gains after the tech giant posted its best ever quarter of sales and a forecast well above estimates thanks to record iPhone sales. Joining us now to discuss is Dan Ives of Wedbush. Dan, good morning. Good to see you.
Great to be here.
Numbers are phenomenal. Let's just start with the numbers themselves. Where on earth did that growth in China come from?
I mean, look, that's, it's pent-up demand, and they're having success. I mean, iPhone 17... it's kind of, it's been sleepy, but actually a pretty huge upgrade cycle. I think you see in the numbers, Obviously the stock reaction. Look, I'd say it's a yawner because investors are just so laser focused on AI, right? In other words, like how they're going to monetize, what's that strategy? Cook talked about it a little. But in terms of the actual numbers and services and iPhone, look, it was sort of a best case scenario. And I think now it's really about showing how they're going to monetize on AI. That's going to be their story for 2026.
Cost. We need to talk about cost as well. Something that typically doesn't come up, but it was anticipated this time around. Why are things getting more expensive?
Yeah, just memory, right? I mean, if you look at everything you see, SanDisk and what's happening on chips, it's supply, DRAM, pricing, everything that's happening across the board. Look, but our view is like ultimately when it comes to iPhone 18, like they're going to have to raise prices probably by $100, $150. So it's something that we worry about less from a margin perspective. But look, the reality is that this stock being 325, 350, or where it is today, it's not going to be because of margins, because of iPhone, because of server. It's about showing truly that they have an AI strategy that they're going to actually roll out that they can monetize.
Well, one of the big skepticism behind Apple and the reason why it's underperformed since December, since it hit a record, has been this question around, is it just an iPhone company? Has it been able to diversify in a meaningful way? Yes, you did see that $30 billion coming from services, but wearables, the Mac line, not seeing that same kind of growth. And I just wonder whether it's enough to just say that iPhone 18 is going to come out with some incredible AI innovation, and that's going to change the trajectory and some of the concerns that they can't move away from this one product.
Yeah, I mean, look, to your point, like the reality is like the core, the ingredients, the hearts and lungs of Apple are always going to be iPhone, relative to as a percent of revenue. But I think their culture has definitely hurt them the last few years, especially because AI, not doing acquisitions. Maybe they've done, like recently they've done a smaller one. But the problem is that investors, they're not going to give them credit, which speaks to our point. Like this is the year from Google to Siri to WWDC to rolling out. It's not going to be on the hardware side. It's going to be how they monetize subscription in AI for the 2.5 billion iOS devices.
So we've already seen this with respect to the earnings from Microsoft and from Meta. Meta was rewarded because they showed how they were deploying this in terms of their advertising. Microsoft was penalized because, guess what? They have to spend that much more and they're not seeing the benefits as quickly as people were expecting. What do you think investors are getting wrong? Because I know you're really bullish and you think that people are underappreciating how quickly this can be rolled out. What are people getting wrong about what they're seeing in those numbers from, say, Microsoft, or some of the skepticism around Apple about how quickly this can be deployed?
Yeah, it's a great question. Look, I mean, Microsoft is almost Meta last quarter, in terms of the CapEx and then now they're doing a ticker tape parade for Zuckerberg and Meta, right? So I think it just comes down to, for these companies, the challenge is like you have a fourth industrial revolution. There's anyone says AI bubble is not, I don't think, plugged into what's happening just in terms of overall spending and what we're seeing, even on physical AI, robotics, autonomous, and everything. But the reality is that for these companies, it's a balancing act. And if you just manage it by a quarter or 2 quarters, they'll lose out. And I think for Nadella and Microsoft, that they got to spend on CapEx. Do I think that conference call was probably a C+ relative to communication? I think that was disappointing, and I think that really caused.
Dan, can I just ask you, a bad conference call now is worth $375 billion to a company? I mean, seriously, doesn't that tell you something about the price of something?
Yeah, and I think what it does, it shows the sensitivity from investors. And look, you see the software sell-off, look at ServiceNow and software right now, is that investors are so hypersensitive. You obviously talk about it on the show all the time, is CapEx, when am I going to see the monetization? When are we going to see the growth? Azure, is it 40% growth? Is it 39%? Okay, what's the whisper number? So, and I think on the conference calls, investors want to see that CapEx toward Azure, toward growth, toward cloud. Now, I think on the other hand, like when you, let's say, like when we see like Alphabet next week, I think that's one, like they're now in a more of a pole position. But a year ago, right, New York City cab driver wouldn't touch it. It was bearish on it. So I think that's the reality of what we've seen in big tech.
Dan, when it comes to Tesla, do you think they merge with SpaceX, or do you think it's XAI and SpaceX?
So I think it's SpaceX and XAI, but I believe Tesla is going to own a piece of that. That's sort of our view. And you made a great point, because the reality is like the future for Musk It's not necessarily, it's not delivery. It's not car. The future, and we talk about it all the time, it's autonomous, it's robotics, and this is really slowly, piece by piece, brick by brick, him building what's essentially like the AI sort of ecosystem, and that's essentially, I think, the step-by-step process.
But if he's eyeing an IPO in June, how quickly does this need to get done?
Oh, I think in the next few months. In other words, like this is something like before March Madness, this is going to have to hit to give some time, like before March, because especially with an IPO, in the summer.
How much is it being driven by the fact that he is the underdog based on China's development of electric vehicles? How much is this not a failed bet, but an idea that he cannot get dominance in the way that he once envisioned in this particular industry?
Well, it speaks to the trial with Altman, OpenAI, that will happen. I think it speaks to there's a view maybe from behind, from the AI perspective, now they have to go more aggressive. XAI has been a huge offensive bet. You look what's happened in China with BYD and with the domestic competition. I think Musk is he's read the room, but it speaks to our view. He is now more of a wartime CEO in terms of what he's navigating. But look, to put this all together for investors, it's a leap of faith, and we've talked about it, but the reality is for Tesla to be 600 the base, 800 the bull case for Tesla, that's not going to get there on deliveries and gross margins. It's getting there on autonomous, Optimus, and FSD penetration.
Dan Ives of Wedbush. Dan, appreciate your time, buddy, as always. And Lisa, I'm right there with you. This is the most difficult market to be in right now, particularly if you've got exposure to China. There isn't a market on the planet that I can think of that is more competitive than the EV industry in the world's second largest economy.
There was a story this morning that I thought was fascinating. 1 in 10 vehicles sold in Europe over the past year was from China. It is a much bigger proportion. I think it's something like 18% of all electric vehicles being sold in Europe currently coming from China. They are the dominant market, and a lot of people go over there and see those cars, say they are incredibly advanced and they're a lot cheaper. So why would Elon Musk hang his hat on that when he's being valued as a tech company? The answer is he's not going to, and these are the moves he's going to take.
They're going to be cheaper in Canada too, by the way, based on recent action by Prime Minister Carney.
Maybe UK is next.
There you go. Who knows, based on that visit too.
Correct.
Equities right now in the S&P 500, negative by about 0.5%, bouncing back a touch. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. Chevron reporting fourth quarter earnings that topped Wall Street estimates. Those shares are in the red. The company planning to increase production in Venezuela by 50% within the next 2 years. Chevron CEO saying, quote, "We have been a part of Venezuela's past for more than a century, and we stand ready to help it build a future while strengthening U.S. energy and regional security." Meanwhile, President Donald Trump says he will impose a 50% tariff on aircraft from Canada and decertify all Canadian-made planes until Ottawa agrees to approve certain jets manufactured by Gulfstream Aerospace. The president also threatening tariffs on Canadian goods if it pursues a trade deal with China, as you guys were discussing. And Amazon is in talks to invest as much as $50 billion in OpenAI. The ChatGPT maker is seeking up to $100 billion in new capital from investors in a round that could value it as much as $830 billion. The Wall Street Journal reporting OpenAI is eyeing an IPO before the end of this year, hoping to beat rival Anthropic. That's your Bloomberg Brief. John.
Yahira, thank you. More from Yahira in the next hour. Up next on the program, commodity concerns.
What's not being discounted in the market, and that gives me extreme concern, is the broadening of the commodity rally. What this commodity and the widening of this basket does, it's going to add a significant amount of volatility to the market. That's what's not being anticipated.
Some of that unwinding this morning. Up next, we'll catch up with Amrita Sen of Energy Aspects. Stocks are down. We're negative by 0.5% on the S&P 500. On the Nasdaq, we're down by 6 or 0.7%. Underperformance on the Russell 2000, down by 0.9. In the bond market, yields are higher, particularly at the longer end of the curve. So 10-year bond yields up by a basis point, 30-year bond yields up by 2 to 3. We've stressed repeatedly through the hour, these aren't big moves. Directionally, it speaks to maybe on the margin a more hawkish Federal Reserve chief if he gets the nomination and gets confirmed. But I will keep repeating this, Lisa. I think the problem with pricing Kevin Warsh is that no one really knows how to price Kevin Warsh.
And we don't actually know whether Kevin Warsh is going to end up being the nominee and whether he can get through anytime soon. I do think, though, that there is a tell here, and that is something that you mentioned earlier, which is the strike price of the Fed put. And if this is going to be a President Trump who is looking for someone who is credible in the market's eyes, does that mean you're not going to get that incredibly dovish tilt that some people were starting to flirt with?
How does he respond in a crisis? It's a question we've got to ask. We don't have a crisis right now. The year ahead should be good based on the projections we're hearing on Wall Street, but questions we've got to ask. Futures down by about 0.5% on the S&P. Huge moves in commodities over the past few weeks. Under surveillance this morning, commodity concerns.
What's not being discounted in the market, and that gives me extreme concern, is the broadening of the commodity rally. When that commodity rally expands into what we're seeing today, copper almost up 10% today, that has significant impact into the AI build-out. What this commodity and the widening of this basket does, it's going to add a significant amount of volatility to the market. That's what's not being anticipated.
So here's the latest this morning. The commodity rally beginning to lose some steam after gold, silver and copper all surged to record highs this week. Bloomberg's Will Kennedy joins us now for more. Well, welcome to the programme. It's precious metals, base metals, energy too in the last week or so. Well, what's behind this renewed enthusiasm for the commodity complex?
Morning, John. Thanks for having me. Well, yes, clearly we've seen the most amazing run-up in commodity prices. I think that there have been a few things feeding into that. It's been going on for some time. This whole idea of debasement and moving away from dollar assets has been good for commodities, especially precious metals. That precious rally has been supported by some very strong central bank buying, and it's drawn a lot of retail investors in copper. Again, we've talked over the last couple of years about the fundamental story for copper, which is these very strong demand drivers and constrained supply, but it's again drawing in a broader group of investors. But when you looked at the chart, especially on gold, it had become so vertical that some kind of pullback was going to be inevitable. And I think that Warsh, no matter who he turns out to be, that announcement has been the trigger for a bit of a sell-off this morning.
Well, as you speak, we've got that announcement right now. I'm going to break the news for you. The President of the United States picking Kevin Warsh, the former Fed governor, to be the next Fed chair, saying no doubt Warsh will go down as one of the great Fed chairs. That pick is official. It comes from the President of the United States crossing the Bloomberg terminal just seconds ago. The President of the United States picking the former Fed governor Kevin Warsh for his nomination to be the next Federal Reserve chair. The President saying Warsh will never let you down. No doubt that Kevin Warsh will go down as one of the great Fed chairs.
So the speculation is over. Decision day has been made and met, and that is confirming what we saw earlier. A real question here about what the response is going to be and who Kevin Warsh is, given the fact that during his tenure from 2006 to 2011 as a Fed governor, he had a pretty hawkish take on inflation and the balance sheet. Right now, you are seeing two-year yields, though, just coming in a bit. So maybe there is this full belief it makes in markets with a pretty small move that he will cater to some of President Trump's whims.
When it comes to the statement on Truth Social, it really reads like a resume for Kevin Warsh and everything he's done in government and the private sector, from Druckenmiller to working at the Federal Reserve. But at the end, it becomes a little bit more personal. I've known Kevin for a long period of time and have no doubt that he will go down as one of the great Fed chairmen, maybe the best. On top of everything else, he is, quote, central casting, and he will never let you down. Congratulations, Kevin. Now, remember, actually, I know this is a bit tongue-in-cheek and a little bit funny, but Trump has talked about that he does look like central casting, said he has great hair, didn't think he went for the job too hard in 2017 and said you should have tried harder. This time he clearly did. On the background, he ran a very successful campaign, having individuals call the president, call the White House, put out some op-eds and go do some interviews.
Let's get to the market reaction off the back of this. Widely anticipated this morning. Yields are higher by 2 or 3 basis points. 10s at 425, 30s up 3 to 488. As you were, no big changes here. If you check out the equity market on the S&P 500, futures slightly negative. We're down about 0.4% on the S&P 500. On the Nasdaq, we're down about 0.6. On the Russell, we're down by 0.9. The headline confirmed from the President of the United States, if you're just joining us, that the President's pick to lead the Federal Reserve will be the former Fed governor, Kevin Warsh. Now, this is the pick. This is the man. we need to talk about the process as well, because there is a bit of a roadblock down in Washington, D.C.
Absolutely. So right now, there is still this DOJ investigation on the Federal Reserve, and Senator Tom Tillis told all of us on this program in Davos, he is not moving. It's the process, not the personnel. It has nothing to do with Kevin Warsh, but he is not moving in terms of the Senate Banking Committee until the DOJ investigation is wrapped up. Now, Jonathan, I have no date for you on when that's going to be wrapped up. So this could take a very long time in terms of the process in Congress.
One thing we have said earlier on this morning, given his reputation at the Federal Reserve, given this is a man who formerly served as a Fed governor, I think there's some credibility with the institution there, as opposed to a man that came from inside the White House and worked closely with the president. Enough credibility, perhaps, that it opens the door for the current Fed chair to leave in May. And this is actually quite important because the chairman's been asked about this in the news conference earlier on this week and refused to engage in the topic. And I wonder if it makes it a little bit easier now for Chairman Powell to step away.
I think that the answer might lie in the "it depends" category. It depends on which Kevin Warsh you are getting, and it depends on some of his rhetoric that comes out in the initial speeches, because ultimately, this is a Kevin Warsh who's written op-eds, yes, about the technological prowess that allows growth without inflation, but also about needing to reshape the top of the Fed, about eliminating certain roles, about unwinding the balance sheet, about clearing some of the decks, and that might cause some more concern. So it really depends on exactly what we hear coming out of this person.
If we do see Jay Powell leave, and presidents for the Fed Reserve chairmen that they will leave and not stay on as a governor, that means that there is a seat for Governor Myron to also make sure that he can stay in his seat if Chairman Powell does leave. So this is also a very interesting morning, I imagine, for Steve Myron, finally getting a little bit more clarity on what his term at the Fed may look like, because it was supposed to end now. It is not, obviously, because they haven't announced someone, but he can probably stay on as well as the Fed. And he's going to be a key individual for Kevin Warsh to try to really herd the cats at the Federal Reserve to line up for potentially interest rates if that's where Kevin Warsh deems is necessary for the economy.
It's going to take some time to find out what he stands for. We talked about how the institution can change you, the weight, the responsibility can change your views on things, and it appears his mind has changed as well. A lot of people in this market are familiar with Kevin Warsh for the way he served as Fed governor back in the great financial crisis, how he responded and what his stance was then. Things can change. People's mind can change in the last 20 years. How credible is that shift, though? Is this still a small balance sheet hawk, or are his recent views really his actual views?
Yeah, or is he willing to take a step further and actually expand the balance sheet and go completely against what he previously believed in? If you think about some of what we had heard from some of the potential picks for the Federal Reserve chair, they were talking about creative uses of the balance sheet. We heard that from Rick Rieder in particular, to get longer-term interest rates lower. He might not necessarily be the same person that he was, say, almost 20 years ago. At the same time, is he going to talk about expanding the balance sheet to bring down interest rates, to potentially make housing more affordable? If he wants a less interventionist Federal Reserve, there are a lot of questions here that still need to be answered.
Exactly. And for that matter, for that reason, I think it's difficult to price this decision this morning, which is why you see such muted price action. Yields up by only 2 to 3 basis points at the long end of the curve. Equity's just a little bit softer on the S&P. I don't think we should make a big deal of this price action. And I keep repeating this. It's going to take time to understand what Kevin Warsh actually stands for, the kind of decisions he will make on the committee once he's confirmed, and also how we'll respond when we get incoming information if the data surprises to the downside or to the upside. What a speech from Kevin Warsh is actually going to sound like.
Wall Street doesn't have conviction, neither do we, because everything has a question mark and an asterisk around it, both the process and the person.
But he's out of central casting and he does look good, right?
His hair's fantastic.
There you go. Apparently they get you over the line.
Exactly.
Jordan Jackson of JP Morgan joins us next. Brian Gardner of Stifel as well, and a whole lot more.
There's a lot of gains in the economy. The underlying economy is, in fact, just fine.
We're in the sweet spot where lower rates are helping to support small businesses.
The risk to growth this year is to the upside. It's hard to get too bearish.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. We're down 1/3% on the S&P. We're negative 0.5 on the NASDAQ. In the bond market, softer, lighter, lower at the long end of the curve. Yields up by a basis point or 3. Up 1 on 10s, up 3 on 30s. This announcement from the President of the United States just moments ago announcing Kevin Warsh as his pick to lead the Federal Reserve and saying, quote, "I have known Kevin for a long period of time and have no doubt that he will go down as one of the great Fed chairmen, maybe the best."
He will never let you down, and that is how President Trump characterized him. Some people in Wall Street scratching their heads, and you can see that with the reaction, albeit muted, as John rightly pointed out earlier this morning. This is somebody who was at the Fed on the Board of Governors from 2006 to 2011, through the Bush era, through an Obama administration, through the financial crisis, and emphasized consistently inflation, as well as the fact that he did not like the use of balance sheet and the expansion of it for quantitative easing in the various rounds. So if this reinvented Kevin Warsh can come in and show to President Trump that he is going to give him his lower interest rates at the long end as well as the short one, well, he's not convincing markets. And what does he have to say to really show that he has changed?
It's a conventional pick for normal Washington. It's pretty unconventional for the President of the United States, given the fact that, as Lisa just outlined, this person actually worked at the institution. Yes, I know he left, but he is a hawk. And the number one question the president has had for everyone through all of his Fed interviews, whether it was his first term or now it's 47, was, do you want to lower interest rates? And this is someone that has a proven track record that he didn't want to lower interest rates during the great financial crisis. So there are other things that obviously Kevin Warsh had to change his views on when he was presenting to the president. The issue is, what does he do when he then is at the top of the Federal Reserve?
Once he gets around the table and has to make his argument over what to do with policy, that first meeting at the halfway point of this year. Equity futures on the S&P 500 negative here, but recovering. We're down about 1/3%. Coming up this hour, we'll catch up with Jordan Jackson of JP Morgan as markets position for a new Fed chair. Brian Gardner of Stifel will join us on the Senate confirmation process. And Eric Nelson of Wells Fargo with the dollar on the rise. We begin this hour with President Trump nominating Kevin Warsh to be the next chair of the Federal Reserve. With more, a man who's seen it all, it's Mike McKee. Good morning, Mike.
Good morning, John. Well, Warsh's nomination is no surprise. He's been on the short list for a couple of years, we could say. In 2017, the president thought about appointing him. He has some strengths that Washington and Wall Street are going to like. He has a background at the central bank, as you've been mentioning. He was on the Fed from 2006 to 2011. He started his career at Morgan Stanley and then moved on after the Fed to Duquesne Capital Management, working with Stan Druckenmiller. So he does have a lot of experience in both areas. He is a harsh Fed critic, and he has a hawkish reputation, as you've been saying. But recently, he's been talking about how AI and the big spending on capital equipment, along with the president's deregulatory efforts, will make it possible to have faster growth with lower inflation. So he may be able to sell the president on interest rates coming down because of that. He does want the Fed to concentrate on inflation, and he does want a smaller balance sheet. So I don't think we're going to get QE from him to affect the longer end. He says the Fed's guilty of mission creep, thinks they do too much, and he thinks Fed officials over-communicate. He has praised Mickey Bowman and her deregulatory efforts, but is willing to give up bank regulation, at least most of it, if he becomes Fed chair. And that may be what appeals to the president, is that Warsh has been such a harsh critic, and he is willing to upset the apple cart and perhaps blow up the Fed. Just last year, he said this: the Fed's current wounds are largely self-inflicted, and its plot armor is showing its wear. A strategic reset is necessary to mitigate losses of credibility, changes in standing, and most important, worse economic outcomes for our fellow citizens. So Warsh is not going to come in and keep things status quo, that's for sure. And also, it's worth pointing out, and this is almost a cliche joke, that in his Truth Social post, the president noted that Kevin Warsh is, quote unquote, central casting. He looks like a central banker, which is the reason he chose Powell over Janet Yellen back in 2017, is because she was too short and didn't look like a central banker, the president said.
That didn't work last time, and I wonder, Mike, whether it works this time. I also want to ask you this. How fair is it that we define this man by what he said and how he felt about policy at the time of the great financial crisis, given that it was that long ago? And how are you thinking about how credible this dovish twist is now in the past year?
Well, it's hard to separate out the president's arguments about lower interest rates from whom he picks. And he said he was only going to pick somebody who wanted lower interest rates. But it is also possible that Kevin Warsh's views have moderated and that he does buy into the AI argument. Remember, Chris Waller has made the same argument. And as Fed officials come into their jobs, especially the chairs, they tend to adapt to the environment in which they find themselves. And so it is it's not fair to say that just because he was extremely hawkish, he will always be extremely hawkish. But you do have to keep in mind his primary concern for the Fed is holding down inflation.
Mike McKee, appreciate your time. Mike, thank you, sir. More from Mike throughout the hour on this decision. If you are just joining us, a decision from the president's official, his pick to lead the Federal Reserve and take over from Chair Powell is going to be the former Fed Governor Kevin Warsh. If you want an opinion this morning, here's one right now. Neil Dutter of Renmac joins us now for more. Neil, welcome to the program. You've been talking about the prospect of this happening for a while. Your feelings this morning?
I think you know my feelings, John. I think the president had a range of better choices, and he picked the worst one in front of him.
What gives you confidence, Neil, that that's actually going to bear out during his purported tenure, should he get confirmed, given the fact that he has had a different rhetoric over the past couple of months and, frankly, convinced President Trump?
Well, I mean, it's one thing to convince President Trump. I think it's going to be quite another to convince the members around the FOMC table. Mike McKee was talking about his record during the financial crisis, which, just to remind everyone, is horrific because, I think anyone would know at the time what to have done, and yet he was worried about inflation even as unemployment was rising. Not exactly what you'd expect to see from the greatest jobs president that God ever invented. That being said, it's not so much that he's hawkish, it's that he's always hawkish. And always, typically when he's wrong in the same direction. I mean, what you want in these positions is someone that has an open mind, that's a flexible thinker. So I think his newfound dovishness looks very suspicious. And, maybe that's one reason why Powell sticks around past May. If he does, he'll be a weak Fed chair. And even if he doesn't, he'll probably be a weak Fed chair because, look, the FOMC, it's bigger than one person. You can't just get in there and exert your will. There are things that he can do with respect to reforming the institution. But, again, has he run a large thing before? I have my suspicions about whether he's actually able to affect that outcome also. So, we'll see. Again, as I've said before, he's an avowed free trader. He used to criticize politicians for not pursuing free trade deals. And one of his other criticisms, of course, is that, the Fed tends to encourage fiscal irresponsibility through their interest rate policy. But of course, the federal government's been fiscally irresponsible despite high interest rates. So I think he has the causality backwards, really. It wasn't so much that... interest rates were low, not because the Fed was trying to bail the federal government out, but interest rates were low because the economy was weak.
Neil, you said something there that I want to follow up on. You think that the nomination of Kevin Warsh makes it more likely that Jerome Powell stays on as a governor after his Fed term is up. Is that correct?
Yeah, I don't see why that wouldn't be the case. Nothing about this process has been normal. And, as I say, you can talk about the sort of golden age and maybe Kevin Warsh believes in the golden age. But, look, he's been hawkish his entire public career. Okay. And he's known for making good economic calls. He is not. So again, this is all, you can't just go in there and say, I think we're in a golden age. The proof of the pudding is in the eating, and the people around that table are going to want evidence before they sign up for something like that, which is why I think it's unlikely that you can just expect them to go in there and deliver a series of interest rates cuts.
So, Neil, that's the analysis. When you're thinking about markets and what you tell clients this morning on how to act accordingly off the back of that, what would you suggest?
I think it's, you can't expect, so this is, I think, of the four candidates that were out there, I would say that Warsh was probably the worst. But that doesn't mean that you just dump all your stocks and punt the long end of the of the Treasury market right away. I mean, it takes time for these things to show up. I think the primary risk is that the president risks getting duped. And that's because if you are able to engineer a series of rate cuts up front, the risk with Warsh is that you may have to take them back aggressively later. When have you ever seen Kevin Warsh make the dovish case for monetary policy and convince someone of that outcome?
Well, it sounds like, Neil, he was able to do that with the president actually in the Oval Office. What do you make of the process now? We're going to have to wait and see play out in Congress. Do you think he actually sticks based on what we're hearing from members of Congress like Senator Tom Tillis, if this takes a very long time and the market continues to push back?
I mean, that's one potential. I mean, Tillis has said that he's going to slow down the nomination process because there's an open investigation. So we need to see what happens with that investigation. But I would just say that perhaps, I'm not a political analyst, Annmarie, as you know, you are. But I would say that there's probably time for pushback from the president's base. A member of the MAGA movement, Kevin Warsh, is not. I mean, let's be clear. He works at a traditional GOP Republican establishment think tank named for a president that presided over the Great Depression.
Right. So you think potentially...
there's, I suspect there's time for the president's base to do to Kevin Warsh what they did to Harriet Miers back in the day.
Right, and she never made it to the Supreme Court because of that pushback that Congress saw on President Bush. Do you actually think, given how you had interpreted Kevin Warsh and his body of work over the course of the years, that actually for what Trump wants, he'd better off just be sticking with Jay Powell type?
Well, I think, look, it's hard to... I think from the beginning of this process, the Treasury Secretary has been very wise to kind of avoid putting his thumb on the scale. That's what Mnuchin did, and it cost him dearly. But if the goal is to put your prince on the Fed, the way to have done that would have been to elevate Christopher Waller, someone who has a track record of convincing his colleagues to the dovish position, while simultaneously showing a penchant for reforming the institution. I mean, it's not like Christopher Waller is someone that was unable to kind of knock heads a little bit within the Fed, is my understanding. But that would also have freed up 2 seats, right? Because the likely outcome at that point would have been that Powell would have gone, and so then you have another seat you could fill in addition to the seat that is going away this week, which is the Myron seat. So. The way to, you have to think about it like the Supreme Court in a way. The way to get the policy and, remake the institution your image is to get your people on there. That seems at the margin, I think, a little bit harder to do with Warsh.
Neil, just finally, if this doesn't go well, and let's see how it plays out, but if it doesn't go well, who does the president get to blame this time?
Well, I mean, it's himself. I mean, the Fed job under Trump is a thankless job, admittedly. I mean, because you're going to sort of get his ire very quickly. So I understand why there's a reluctance among some to want to do it. But as I said, I mean, there were a lot of good candidates out there. Some of them I didn't like, some of them I did. But I think of the lot, I would say, for most of the people I talked to, but even just more importantly for myself, I think that Warsh was the least favorite of the candidates being thrown out there.
Neil, we respect your opinion. Thanks for jumping on for us. Thank you, sir. Neil Data there of Renmac on the president's decision just moments ago. Let's get you an update on that and more with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Exactly, John. As you guys have been discussing, it's official. President Donald Trump nominating Kevin Warsh to replace Jay Powell as the chairman of the Federal Reserve. In a post on Truth Social, the president's writing, "I have known Kevin for a long period of time and have no doubt that he will go down as one of the great Fed chairmen, maybe the best." Meanwhile, shares of Verizon rising 2.7% in the pre-market. The company reporting fourth quarter earnings that beat Wall Street estimates. Verizon also adding its biggest gain in mobile phone subscribers since 2019. It expects to add up to 1 million phone customers this year. And U.S. law enforcement is investigating allegations by former Meta contractors that company personnel can access WhatsApp messages. Sources telling us here at Bloomberg, the claims have been examined by the Commerce Department and separately in a whistleblower complaint to the SEC. Meta markets the app as having end-to-end encryption. That's Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, the president tapping Kevin Warsh to lead the Federal Reserve. Brian Gardner of Stifel joins us next. Live from New York City this morning. Good morning. Two-day slide on the S&P could become day three. We're down by 0.4% on the S&P 500, down by 3/4 on the Russell. In a bond market, 2s, 10s, 30s shaping up as follows. Yields up just a little bit. It's not a big move. Up about a basis point at the long end of the curve. For all the talk of Kevin Warsh being a hawk, yields are lower at the front end. We're down by 2 basis points to 353.47. And in foreign exchange, we're shaping up as follows. For the dollar, DXY, just about positive on the session so far, positive by 0.1%. Neil Dutta with us just moments ago from Renmac, publishing this. Kevin Warsh risks duping the president of the United States.
And it's for all the arguments that he just put out there that ultimately he potentially will be a lot more hawkish than what he has put himself out as. I will say that in the near term, the reason why short end rates are lower could be because of some of the op-eds and other arguments that Kevin Warsh has made about why you can cut rates at a time of growth because of technology. Over the long term, focus on the balance sheet. That has been a huge issue for him in the past. Has that changed going forward?
If you're the president, though, and you read Neil Dutta's note, this is absolutely brutal. A member of the MAGA movement, he is not. He's a free trader that comes from a traditional cookie-cutter Republican think tank. Named for a president that presided over the Great Depression, this is the best that President Trump could do, he asks. Warsh would make sense if Mitt Romney were president. Of course, Mitt Romney, this president continues to call a rhino, Republican in name only. This is a brutal attack on the president's pick.
I don't think this is the consensus view this morning, given how fired up Neil is. But this last line here, with Senator Tillis slowing down the nomination process due to an open investigation, there is still time for serious pushback from the president's populist base.
Yeah, so this is sort of the, I guess, reason why you're not seeing much reaction is because there's a lot of daylight between now and the confirmation of a Kevin Warsh as the next Fed chair. I will say, though, there is a signal here, regardless of who gets in. And that is that President Trump cares more maybe about the appearance of the person, not just in the physical way, but also in terms of how he is going to appeal to markets going forward. So it's not going to necessarily be some of the most dovish and less Fed independent cases that people are putting out there.
If you are just joining us, welcome to the program. Our top story under surveillance this morning, President Trump picking Kevin Warsh to succeed Jay Powell as the next chair of the Federal Reserve. Warsh will need to be confirmed by the Senate, which may not be an easy process. Jonathan Tamari of Bloomberg Government joins us now for more. So, Jonathan, the process begins. Here's the nomination. What's next?
So the nomination's first stop is at the Senate Finance Committee, and that is really where the complications lie, because one of the senators there, Tom Tillis, Republican, North Carolina, says that he will not allow any nominations to go forward as long as this investigation into the Fed is ongoing. And Republicans have a one-seat majority on that committee, so the math, very easy. If Tillis opposes and no Democrats cross over, they can't move that nomination. So we're going to need to see what happens with that. You know, Tillis has raised concerns in the past about other nominees, but he's no longer running for re-election, so his political calculus is different. He's shown a measure of independence. He's been one of the first Republicans to call for Kristi Noem, the Homeland Security Secretary, to be fired. And so he's pretty much fired up and liberated by not having election concerns.
Annmarie, we talked about it with Senator Tillis directly last week. He said very clearly, it's not about the man, it's about the process.
Right, and that process can't go through without him. And actually, Senate Majority Leader John Thune was asked about this last night on the Capitol, was asked, do you think we're going to be able to see a new Fed chair come to rise without Senator Tillis? Probably not. You can't confirm him without Senator Tillis. So Senator Tom Tillis is literally the hurdle and the roadblock standing in the way of really having a very quick nomination process when it comes to the Fed chair.
Jonathan Tamari down in Washington. Jonathan, thank you. Brian Gardner of Stifel writes the following. Warsh has a history of hawkish views which run contrary to Trump's goal. Brian joins us now for more. Brian, that begs the question, how did we get here?
I think you have to tip your hat to Kevin Warsh. I think the politics that went into this, there was a campaign, basically. I think he ran a very good campaign to get the job. I mean, we've had a series of stories and news leaks criticizing the other candidates. And I'm not, I have no personal knowledge who was behind that, but who's the last man standing? Kevin Warsh. So you would assume that there were some fingerprints on the effort that went into knocking down the other candidates. And let's not forget, with Donald Trump, personal relations matter a lot. And Warsh's father-in-law and Trump went to college together and have business relationships going back decades. So there's always that angle that I think people overlook. Personality matters for Trump. Remember, a lot of the nominees that have not worked out for him over time, he will turn and afterwards will say, well, that person interviewed great. I think Kevin Warsh interviewed great.
Brian, I'm glad you brought that up because also there was a recent story about how Ron Lauder had this deal with Ukraine. Of course, as the Trump administration is trying to make sure that investors are there if they get a peace deal to rebuild that country. Are you saying potentially Kevin Warsh is in this position because his proximity to power, not exactly how he thinks about the Federal Reserve?
I think it's a factor. I can't rank what the factors are, but kind of reiterating my earlier point, with Donald Trump, personal relations matter. He wants to trust you. He wants to know you. And he just wants to feel good about you. And that personal connection that he has through Lauder, I think matters. I think mattered in the process. I think it gave Warsh an advantage that some other candidates, like a Rick Reeder, who did not have personal connections to the White House and to the president, does not have a long history with the president. I think that helped Warsh hurt Reeder. I think it hurt Christopher Waller a little bit, quite frankly. Again, I have no personal knowledge of this, but there doesn't seem to be a close personal connection with Waller and the president, and I think that hurt. There was a personal connection, is a personal connection with Kevin Hassett, but again, some of the stories that came out were less than flattering about how the Fed may operate under Hassett, how the markets react, and maybe Trump took note of that.
You said how the market reacts, Brian. Do you think that the move that we're seeing this morning is enough to make President Trump start to think, did I make the right choice?
No. Unless something changes during the confirmation process, but the immediate market reaction is not. Lisa, if the immediate market reaction was enough, we'd have, policy whipsawing all over the place. Yes, the White House clearly looks at the markets, but I don't think there's always a knee-jerk reaction to it. Let's see what happens over the next couple of months. Let's see what happens with the confirmation process, how that plays out. As has been discussed, it could be lengthy. There's going to be some political drama around it. It's not just Tom Tillis. Rand Paul is going to have a problem on the Senate floor if we get there. This is going to be a very interesting confirmation process, and maybe something during that time pops up that gives the president time to pause, reconsider. Again, it's highly, highly speculative. It is highly unlikely, but it's not impossible.
Brian Gardner, Stifel. Brian, thank you. Appreciate it, sir. Our top story this morning, the president making the call, finally choosing his man. It will be the former Fed Governor Kevin Warsh to take over the Federal Reserve from Chair Powell, and perhaps Chair Powell will actually head to the exit in May.
Yeah, although what we heard from Neil Dutta is it actually might make it less likely. So we shall see. I will say this is a market, and you've mentioned this before, John, that is remarkably calm. And I can't emphasize that enough. Yes, you are seeing a knee-jerk reaction, but it is incredibly muted given some of the rhetoric that we've heard this morning.
The story isn't that bonds are selling off. It's that they're not really selling off at all. Yields are up by a basis point or two at the long end of the curve. Up next, Jordan Jackson of JP Morgan. If you're just tuning in, welcome to the program. Equity futures on the S&P pulling back by 0.4% on the S&P 500. We're down by about 0.5% on the Nasdaq, down by 0.8% on the Russell. Kevin Warsh is the president's man. His nomination to be the next chair of the Federal Reserve. The confirmation process could stall. We've talked about that extensively throughout this morning. Senator Tillis is not going to entertain this conversation until the DOJ investigation into the Federal Reserve is wrapped up and goes away. That could delay things. In the bond market, 2-year, 10-year, 30-year bond yields look like this. Up by a basis point on 10s to 424. Up by 3. Call it 3. We'll round it up on 30s to 490. In foreign exchange, the dollar just a little bit stronger throughout this morning. These aren't big moves. I understand there's an important conversation to have about who Kevin Warsh is, what he stands for, how he'll govern if these arguments will be persuasive to the committee. But right now, these aren't big market moves.
So does this mean that, A, this is a market that doesn't think that Fed rate cuts are necessary, as you were commenting in some of the breaks, which I think is actually a really important point? Or is this a market that is comfortably or uncomfortably numb, that is not responding to anything? And that ultimately, there is lack of conviction, a lack of edge that you're seeing in markets that's leading to this very narrow range. Which is it? And I think that's going to be a really important test.
When it comes to the process in Washington, the DOJ investigation really needs to get wrapped up in order for this individual to take over the helm at the Federal Reserve. But once it does, I don't see him having issues actually on the floor or in the Senate Banking Committee. He's already been confirmed once before in 2006, and that was a voice vote, basically unanimous. Different time just for a governor position. There'll be a lot of attention on this, but he will actually sail through confirmation. The problem is we cannot speculate on when that confirmation process will begin.
That's why also, given his experience, I kind of take the other view to Neil Datter of Renmac. I respect his views. They're important. But ultimately for Chairman Powell, why would he stick around? Former Fed governor selected to lead the committee.
He's conventional.
And he's going to stick around. That doesn't add up to me.
It's just the only question that I have is, how did he convince President Trump? And will that Kevin Warsh please stand up and let's see who he is when he actually gives that speech?
In the confirmation process? Yeah, that'll be interesting.
You can say that,
Then the price action might be a little bit different.
I think that's actually what people are waiting for.
But for now, things are pretty calm. Let's get your morning movers with Yahira Anand. She joins us now for more. Hey, Yahira.
Hi, John. A lot of earnings to get through, and we start with Chevron and Exxon. A lot of anticipation going into these earnings because of Venezuela and falling oil prices. Both Exxon is down 1.8%. Chevron slightly in the green, despite both companies beating estimates. It was higher production that was able to offset those falling crude prices. Meanwhile, moving on to Verizon, those shares are up 2.3% in the pre-market as it shows early signs of a turnaround under a new CEO. The company posted its biggest gain in wireless subscribers since 2019, adding more than 600,000 in the fourth quarter, well above expectations, and a lot of that having to do with promotions. And we end on American Express. Credit card company shares are falling 2.8% after the company missed on earnings expectations, even as customer spending jumped. Billed business rose 9% to $445 billion, beating estimates. And the CEO did have something to say about President Trump's cap on credit card rates, saying it would spark a pullback in credit like we've never seen before. John.
Yahira, thank you. Appreciate the update. Some of our top stories for you on our radar this morning. Amazon in talks to invest up to $50 billion in OpenAI. The ChatGPT maker is seeking up to $100 billion in new capital from investors. The Wall Street Journal also reporting OpenAI is preparing for a fourth quarter IPO. Elsewhere, President Trump and Senate Democrats reaching a tentative deal to avert a partial government shutdown. A lapse in funding is still likely to occur as the House, which must approve any changes to the package, won't return to Washington until Monday. And finally, President Trump tapping former Fed Governor Kevin Warsh to lead the Federal Reserve. Trump posting on Truth Social in the last hour that he has no doubt that Warsh will go down as one of the greatest Fed chairmen. And also the important piece that he's out of, quote, central casting.
Look, this is something people have been talking about a bit tongue-in-cheek, and yet that was in his social media post on this release. There is a big question, not only about whether he will go through, but what his influence and stamp will be on the Federal Reserve. And I think that the key question really has to do with current Fed Chair Jay Powell, whether he stays, and what the composition looks like, how much it is up for grabs, given some of the changes in the churn that could be under the surface.
I do think that Chairman Powell will go now. This person is born of the Fed. That's where he got his start, really working in terms of monetary policy. He was a governor. I know he left. But I think it is a conventional pick enough for Chair Powell to say, I've had enough. I've been doing this a long time. I'm now going to go and retire. It does make it a little bit more interesting, though, because had they gone for Governor Waller, they would have, to Neil Dutta's point, had more chances to really shape the direction of travel at the Federal Reserve, because this is a deliberative body. Now, a lot of weight is going to be put on Kevin Warsh if he now has this newfound ideas about where inflation should be and where monetary policy and interest rates should be. He's going to have to convince everyone else, and that's going to be a hard task.
A lot of people publishing this morning. This came from Pantheon Macro, just dropped into my inbox, and I think this will resonate with a lot of people in the market right now. It's reasonable to assume that he told the president he favours reducing interest rates today. Obviously, otherwise he would not have been nominated. But, and this is the key line, once on the board, it's not certain how Mr. Warsh will vote. Lots of people are grappling with the same issue this morning.
Which is the reason why you're seeing On the front end, yields coming down just a little bit. And on the long end, yields going up just a little bit because people are saying, okay, this is somebody who doesn't like the balance sheet and longer term might take a more hawkish approach. The moves are muted. We have no idea what exactly will transpire in terms of who will be the next Fed chair, whether he'll get through, and what he will act like. Still, there is skepticism that 18 years does not change a person with some pretty established views.
So Kevin Hassett was also in the running. The president saying this on social media just moments ago. There was great speculation that highly respected Kevin Hassett was going to be named chairman of the Fed, and a great chairman he would have been. But quite honestly, he's doing such an outstanding job working with me and my team at the White House that I just didn't want to let him go. Kevin is indescribably good. So as the expression goes, if you can't do better, don't try to fix it. Thank you, Kevin, for such a great job. The president just moments ago.
And I spoke to Kevin Hassett in Davos, and he said it was really sweet how the president came out and said, I saw you on TV, you're doing such a good job. If Kevin Hassett really wanted to be the Fed chair, he was actually working in the wrong job before potentially being elevated, because he was going out and really had to tout the president's economic agenda. And for some, that meant he was just too close to the sun and would potentially be taking too many cues from the Oval Office if he were to go over to the Fed and not thinking more independently.
Let's stay on our top story. Here's the market action. Equities edging lower as markets digest the president's announcement that Kevin Warsh is his nomination, the nominee for the next chair of the Federal Reserve. Joining us now is Jordan Jackson of JP Morgan Asset Management. Jordan, good morning. Good to see you.
Good to be here.
What does this change for you?
Not a whole lot, right? I think you hear this from Powell. He very much trusts the structure of the Federal Reserve, right? The staggered nature of governors, the rotating bank presidents. One person coming in who maybe on the margin is a little bit more hawkish around balance sheet, maybe a little bit more dovish around rate policy, is going to really change the narrative all that much. And that's why you're not seeing a very muted move in the bond market.
Do you think people are waiting to understand exactly which Kevin Hassett this is? Kevin Warsh, excuse me. I'm getting my Kevins mixed up this morning. Tweets are flying, or Truth Socials are flying, and I'm getting them all mixed up. I mean, do you think that this really is a sort of wait and see what the rhetoric looks like from a new Kevin Warsh?
I think so. I think what's going to be more important is how the economy evolves over the first half of the year. We're looking at stimulus. Markets are anticipating pretty strong growth to round out the year. That momentum continue to carry through the first half of the year. Maybe we get some stickiness and inflation on the back of that as well. And so that's really what's going to continue to drive the narrative for rates.
This is important, and this is something that John Stoltzfus talked about earlier this morning, that there is a sense that ultimately this is not a very rate-sensitive economy. And that right now, this is not an economy that needs rate cuts, and it is driven by something entirely different. So are you saying it doesn't matter, or on the margins, could it matter for what the composition of the potential gains look like? In other words, go back to big caps and maybe stay away from the small cap rally that we've seen over the past month or so?
No, I certainly, you have to be sensitive to the idea that this economy is less sensitive to interest rates. When we were at 5.5% on Fed funds, the economy didn't slide into a recession, right? Even with sort of above neutral on balance over the last 24 months or so, the economy has continued to hum along quite nicely, despite softening in the labor markets as well. So, I think, from a tactical perspective, we sort of like this kind of rotation that we're seeing over the next 3 to 6 months. Strong growth, Fed still biased towards easing to some extent, supportive for the small cap trade, but I think we got to really focus in on the fundamentals in that part of the market.
I know the market moves are small this morning, but is the Fed still biased towards easing when you see these market moves? And it's because the market is still trying to digest if this is the hawk, Kevin Warsh, to be the top of the Fed.
What was interesting, what Powell explicitly said at the FOMC meeting is that when you look at Fed governors and members who submit outlook for interest rates, there's not a single member who thinks rates should be higher, right? So there's still this explicit bias, right, across voting members that the next move is going to be a rate cut. It's just a question of when and the magnitude of rate cuts that we get.
When do you think it's going to be?
I'm in agreement with the market. I think we don't really see a move until the middle of the year. It starts to get a little bit tricky in terms of the committee not wanting to look political around midterm elections. So maybe this could be a July, skip in September, next move either in November or December. But I think we're probably looking at still 1 to 2 over the second half of the year.
Do you think this story has put a floor in the US dollar for now?
I think so. Some of the repricing that we should see in rate cut expectations, maybe going from 2 to 1, perhaps, puts a little bit of upward movements on the dollar. I think you're seeing, obviously, the dollar move a little bit higher to start the year. Commodities selling off, so maybe we're seeing a little bit of profit taking in the gold-silver trade as well. I think what's really going to be important, though, from an investor perspective is the shape of the curve. We still very much believe in the steepening out, right? But this is a twist steepener, not a bull steepener. And that's what we're seeing playing in the morning. Long rates moving higher, front end still modestly lower. So where do I want to invest? Well, I want to invest in the fulcrum. That's the 2 to 3 year part of the curve from a duration standpoint.
Jordan, good to see you. Thank you, sir. Jordan Jackson there of JP Morgan Asset Management. The belly of the curve unmoved so far this morning. Looking out to 10s, yields up by 2 basis points, 30s higher by about 3. Pretty muted price action given the gravity of the story and the conversation this morning. Let's give an update on stories worldwide with your Bloomberg brief. With us for more, here's Yahara. Hey, Yahara.
Hi, John. It's the big reveal. President Donald Trump finally announcing his pick to replace Jay Powell as chair of the Federal Reserve. The president nominating former Fed Governor Kevin Warsh in a post on Truth Social. The president writing, "I have known Kevin for a long time and have no doubts he will go down as one of the great Fed chairmen." Meanwhile, President Trump suing the Treasury and IRS for at least $10 billion over an unauthorized disclosure of his tax returns to the press. The president, his sons, and the Trump Organization filing the suit, which seeks damages for the alleged unauthorized disclosure, which was based on leaked data published by the New York Times. And India's probe into the deadly crash of a Boeing 787 jet last June is increasingly focusing on deliberate pilot action as the probable cause. Sources telling us here at Bloomberg, investigators have ruled out mechanical failure and not found evidence of sabotage. A final report on the causes of the crash is expected to be issued by June. That's your Bloomberg brief. John.
Yahara, thank you. Thank you very much. Up next on the program, President Trump tapping Kevin Warsh for Fed chair.
I think the president had a range of better choices, and he picked the worst one in front of him. Not exactly what you'd expect to see from the greatest jobs president that God ever invented.
The conversation up next with Eric Nelson of Wells Fargo, live from New York City this morning. Good morning. Equities negative by 0.4% on the S&P 500. On the Nasdaq, we're down by about 0.6, and the bond market yields bleeding a little bit higher at the long end of the curve. The president has named his man. What's going to happen with the process? The senator from Massachusetts with something to say. What's new? Here we go. That's not what I meant. I mean, like, what's new? What's she got to say? What's new?
Oh, I thought you meant what's new, because she had something to say about the Fed and Trump.
Say something like that? No.
Should we go to the statement?
Absolutely not. I would never be that rude.
Okay, well, let's go to the statement. Quote, no Republican purporting to care about Fed independence should agree to move forward with this nomination until Trump drops his witch hunts of the current chairman of the Federal Reserve and Governor Lisa Cook. Well, Senator Warren, you should know that Senator Tom Tillis, your friend on the Senate Banking Committee, was on with us last week in Davos, and he said the Senate has a role to play in this. And for Senator Tillis, it's about the process. He's going to be fine, I imagine, with Kevin Warsh. But it's the process, and that's why we have no date on when Kevin Warsh's confirmation hearing can even begin, because the DOJ is still investigating the Federal Reserve, and according to reports, the Federal Reserve is really dragging out the information the DOJ is requesting in those subpoenas.
That's a new statement.
That's a new statement,
statement.
But she does have a lot to say about the Fed.
And that's called pulling on a closed door, right? The opposite of pushing on an open door.
That's very true.
Like Tom, Tillis has already done that.
Yeah, Mr. Tillis, Senator Tillis, please call in. We would love to hear from you and explain how long this process is going to take and what you need to see.
I'll message him in a moment.
Please do.
I'll try and make it happen.
Yeah,
right?
You know, he watches Bloomberg Surveillance at the gym. In the Senate, the gym always has Bloomberg on, and then one other channel that changes every so often. So he's always watching us. Senator,
thanks for letting
on the
everyone
treadmill. Give us a ring.
Can I go now?
Yeah.
Thanks. All right. Under surveillance this morning, President Trump tapping Kevin Warsh for Fed chair.
I think the president had a range of better choices, and he picked the worst one in front of him. His record during the financial crisis, which, just to remind everyone, is horrific, because, you know, I think anyone would know at the time what to have done, and yet he was worried about inflation even as unemployment was rising. not exactly what you'd expect to see from the greatest jobs president that God ever invented.
So here's the latest this morning. The president picking former Fed Governor Kevin Warsh to replace Jay Powell as head of the Federal Reserve. The president writing this just moments ago on social media that Christopher Waller, Rick Reeder and others were interviewed for the Fed position. They all would have been outstanding and have a great and unlimited future with Trump. Such amazing talent in our country. Thank you. Joining us now to discuss the market reaction, Eric Nelson, FX Director at Wells Fargo. Eric, good morning.
Good morning.
Keep asking the same question. What does it change? What does this change?
Well, I think a lot of the focus has actually been on the balance sheet, right? Kevin Warsh has historically wanted a smaller balance sheet. Part of that, though, is also deregulation and, let's be honest, less Treasury issuance. I think the deregulation piece is something he can fight for, and I think he will fight for, and that's really interesting. It's not being talked about that much. The Treasury issuance is a little bit difficult, right? That's going to be a battle. I don't know that he's necessarily going to win that battle. So in terms of actual balance sheet impact, probably pretty minimal early on. The Fed is increasing its balance sheet this year. It's going to be hard to reverse that. I think maybe some dereg can maybe offset and allow maybe some change in tack next year. But I think in terms of rate policy, the pricing doesn't make a lot of sense to me, right? We've got things getting a little bit more stable, very few cuts priced near term, and then all the cuts are in the second half. We know why, right? People think someone's going to come in and smash rates lower.
Yeah.
Is that Kevin Warsh? I'm not so sure.
Well, let me put you on the spot. If he's there, first meeting's June, right? If it's confirmed by then, how does he vote? Do you even know?
I don't. I mean,
and is that a data-dependent I don't, or is that I just don't because I don't know what he stands for?
More the latter. I mean, I think he obviously we've seen lots of different sort of stances from him in the past. More recently, we know he's talking about the AI productivity boom, which, let's be honest, lots of the Fed chair candidates were talking about. The thing for me is, doesn't that also raise our star? So, is there really an argument here to get rates much lower on that? And I think at the end of the day, regardless of where he votes, it's a committee, right? We've heard this time and time again. There's a reason for it. It's true. It's going to be hard to get the whole committee on the side if the data is getting better.
I find it remarkable. It seems like Wall Street does not watch The Bachelor. It seems like Wall Street's not that interested in The Bachelor because ultimately we're seeing this sort of consolation prizes coming out and the potential for a significant changes at the Federal Reserve at the same time the market's saying, not that interested. If it changes anything on the margin, is it more from the point of view of the bond market or more in terms of the dollar and the perception of Fed independence going forward?
Well, certainly one follows the other, right? So FX is very much taking its cues mostly from the bond market. I think given that pricing and where that pricing is, the moment there's a sort of realization, I don't know what it's going to take, maybe it's the data or just actually having that person in the seat, at some point that perception is probably going to change, right? Especially if the data are getting better. And that'll feed through to the dollar. The question for me, though, is that the dollar's not all about what's happening in the U.S., right? So I think tactically we're getting long dollars here. But looking into the second half of the year, look at the European growth data this morning, right? The trend here in global growth is getting a little bit better. So I think the dollar tactical long is a short-term trade. The trade for the year is still short dollars. We're just not at best levels right now.
So it seems like everyone is coming to the table and saying that the Fed is kind of irrelevant right now, or not that relevant in terms of just driving price action. And if it were to stay where it is, the markets wouldn't really change significantly. Are you on that page?
I think we can get a decent move in rates if that second half easing gets priced out, right? There's 40-odd basis points. That's a decent move. That gets you, 2-3% on the dollar. Is it going to completely change the dollar trend? Probably not, right? Unless you have some sort of global growth shock. Maybe it's, things in China are still looking a little bit shaky in terms of domestic growth. I could paint that narrative. But I think the U.S., to your point, we're not going to get hikes from the Fed. That would just shock me, right? So until that happens, I think it's hard to get super excited about a trend in stronger dollar.
When it comes to the dollar, though, I mean, it happened just this week, although it feels like decades ago. The president did say he can make it go up or down like a yo-yo, and he pointed to China and Japan, how they devalue. Do you think at his core, President Trump wants a weaker dollar because he sees how important it is for exports?
I think, and he's been quite vocal about that, to be fair, in the past, not just recently, right? He's been sort of making public comments about particularly Asian currencies being too weak for decades, right? Question is, can he do anything about it? I mean, he can certainly do things like we had the Greenland threats last week, or was that? Honestly, I've lost track of time at this point. I think he certainly can do things like that. But at the end of the day, the FX policy is the purview of the Treasury. We heard Scott Bessent out, right, a couple of days ago saying we still have a strong dollar policy. We're not going to do joint G7 intervention anytime soon. So that's a good reminder that Trump can say all he wants. Bessent, Treasury has the call.
But the more the president talks about this, do you think it potentially leads this year into being some sort of FX war?
Only if the Treasury gets involved. I think if there is some more explicit action. I mean, certainly the U.S. actually outright intervening even in dollar yen, dollar Korea, that would be interesting. Joint G7 intervention, totally different ballgame. Of course, that also requires buy-in from the rest of the G7. Not sure we'll get that. I also think that's a tail risk. I don't think that's necessarily likely. So I think Trump comments don't matter all that much in this context.
There is a sense, just stepping back and looking at the broader bond market, particularly at the long end, it's been driven by global trends, what we've seen in Japan in particular, and this idea that there is so much debt sloshing around in the system that there is going to be, at some point, a bit more vigilante kind of exercises on the part of long-term bond buyers. At what point are you expecting that to become a more dominant narrative? We saw that for a hot second with Japan, but do you think that that's going to be a driver of a lot of volatility for the remainder of 2026?
I'm not so sure. I mean, Japan certainly has its own very unique bond market. There's been a lot more foreign involvement there, a lot of foreign hedge fund activity. I think we've seen from global finance ministries is actually moving more towards short end and belly issuance, right? They're responding to the weakness in the long end. And so what that does is that puts more pressure on short-end funding markets, right, and some of these other currencies, which is really a paradigm shift. The buyer base in the long end has completely changed. And I think the fact that people are responding to that gives me a little bit more comfort that we're not going to see some massive blowout steepener in some of these countries.
What would you have to see to actually get more interested in The Bachelor as it plays out in the confirmation edition?
I wish that I had the central casting look. To get the Fed chair nod.
Your hair's fantastic.
Someday.
It's brutal that it's been reduced to that, but ultimately the president's encouraged the conversation, hasn't he?
I mean, he is at heart a television producer at the most incredible extreme.
Yeah, and Jim Bianco and Mike McKee brought it up earlier. This was actually something that hurt Janet Yellen. The president actually thought she was too short. I believe she's 5 foot, and that was actually part of an issue. But this is someone you have to remember. This is the president of the United States who was the head of The Apprentice. He does think in terms of news cycles and how people present on television.
Central bank communication is different, though. I remember people saying the same thing about Chairman Powell, and in the early part of his first term, in those first years, there were some mistakes that were made. They said the same thing about Christine Lagarde. Who would describe Madame Lagarde as someone who was an ineffective communicator? She communicates all the time. She was not good when she first got that job. I think you have to raise the same question about this individual too.
Yeah, just how high is the bar and how much can he actually meet some of the expectations given some of his past rhetoric? And that, I think, is what you're seeing from a lot of the notes coming out this morning.
Up next on the program, we'll catch up with Alex Altman of Barclays, Lindsay Piegza of Stifel, and Stephanie Roth of Wolfe Research, and a whole lot more. The third hour of Bloomberg Surveillance. Up next.
Where we are right now is a market that has a lot of expectations baked in.
Earnings are at a record high and going higher.
Wall Street is willing to bid your stock higher if you're showing the top line growth.
Earnings growth is going to be the big lifeblood going forward.
Stock prices follow earnings.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
There's only one story on Wall Street this morning. Live from New York City. Good morning. Good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your price action. The scores look like this. Equity futures on the S&P 500 down by 0.4%. On the Nasdaq, we're down by 0.6%. In the bond market, pretty muted price action so far. Yields up at the long end by 2 on 10s, by 3 or 4 on 30s. A statement from the President of the United States earlier on this morning nominating Kevin Warsh, the former Fed governor, to be the next Fed chair, saying, I've known Kevin for a long period of time, have no doubt that he will go down as one of the great Fed chairmen, maybe the best.
Yeah, and right now there is a long process between the nomination and the confirmation. Nonetheless, there is a real tell in the lack of market reaction. Yes, you are seeing some moves, but they are fairly muted. What this suggests, and we've heard this from a number of guests this morning, this isn't a very interest rate sensitive market. This isn't a market that needs significant rate cuts to continue to go. And this isn't a Federal Reserve that's front and center right now. The question is the reaction function going forward, and that's what's going to ultimately be tested in speeches and the confirmation process.
The Wall Street Journal editorial board is out with their review. The grumpy old men, as the Treasury Secretary Scott Bessent calls them, that's his words, and they say this is President Trump's best second-term appointment. And because he is an inflation hawk, it means that he has more credibility with financial markets and maybe make it easier for him to be credible on the board to convince them to cut interest rates.
Are we playing multi-dimensional chess this morning?
Yes.
Is that what this is?
I mean, 100%, obviously. I mean, it's Bachelor, gone extreme. Honestly, I mean, look, I think that what this is, yes, we're going second and third derivatives, partly because we have no idea. And so people are trying to game out when this will matter, how this will matter, how to get an edge. And this is an edgeless type of moment where we don't understand the process. We don't understand exactly who this person is in his new iteration. We don't understand what the necessity is for this economy at this moment.
It was what Kevin Warsh said in April last year that I think probably stuck with the president. The Fed has acted more as a general purpose agency of government than a narrow central bank. If you want to reform the Fed and the institution and make sure they just stick to their dual mandate and nothing else when it comes to climate or other issues, maybe this is your guy. And that's what they're leaning into this morning.
I'm sure the Treasury Secretary is happy with that as well. Coming up this hour, here's the lineup for you. We'll catch up with Alex Altman of Barclays, with stocks aiming to avoid a third consecutive day of losses. Lindsay Piegza of Stifel is going to break down the latest data for you at 8:30 Eastern Time, alongside this man right here, Senator Tom Tillis of North Carolina, joining the program in about 30 minutes' time on the process, because the process in Washington is the important piece of this.
Yeah, the process is very important because right now there's an investigation into Jay Powell and the Federal Reserve. There was a subpoena from the DOJ. We do not have that wrapped up yet, and Senator Tillis made it very clear. The Senate Banking Committee is not going to move. He is going to be a hurdle until this is wrapped up. So while we may have the pick for Kevin Warsh, when does this actually get done? Until the DOJ wraps that up, he cannot move forward with his hearing.
We begin this hour with stocks slightly lower. We're down by about 0.4% after the president announced he's nominating Kevin Warsh as the next Fed chair. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, you look at the equity markets and you think about all the things that the president's done in the last couple of hours, threatening Iran, threatening Canada with more tariffs, threatening Cuba. There's a lot for them to digest, but the bond market is reacting to Kevin Warsh, and relatively mildly, but we are seeing a steepening of the curve, the dollar weakening a little bit. He's a well-known quantity on Wall Street, and he is accepted as an inflation hawk. Went to Stanford, graduated Harvard Law. He'd be the second lawyer in a row to run the Fed. Career at Morgan Stanley, then went to the White House National Economic Council, was nominated as the youngest Fed governor ever in 2006 by President George W. Bush. Since then, since he left the Fed, 2011, he's been working for Stan Druckenmiller at Duquesne. So he does have a lot of ties to Wall Street, and I think you'll find that people on Wall Street will be generally supportive of the idea that he will do what's good for them. But Warsh has made it clear he thinks the Fed should concentrate on inflation. And even if he's looking to cut rates, he's not going to let inflation get out of control. He will talk about that a lot. He does want a smaller balance sheet. Don't expect much in the way of QE. And he does think that Fed officials over-communicate. Not sure he can put that genie back into the bottle. He's willing to give up some aspects of bank supervision, too, because he thinks the Fed does too much. So there's a lot there for the president to like in terms of deregulation and in terms of cutting the Fed down to size. The big questions are going to be what he does about inflation. He wants operational independence for the Fed, but is willing to work with Treasury, areas they can cooperate on, maybe a new Treasury-Fed accord. How low should interest rates go? He'll make the case for cutting because AI gives you some room to do that if you get higher productivity. But I don't think he'll push it too much. He'll let it organically unfold as the economy gets better.
Mike McKee, I've got one question, and not about Kevin Warsh. It's about Chairman Powell. He was asked about this in the news conference. You were there. His thoughts now on staying longer beyond May on the committee following this pick. Does that move the dial?
It's hard to say because while Kevin Warsh does have institutional credibility and is something of an institutionalist, having worked at the Fed, he does want to make a lot of changes. So does the current chair, stick around to shepherd some of those changes and sand off the rough edges? Or does he say that Warsh is enough of a conventional pick that he feels like he can leave? And beyond Jay Powell, we've got questions about whether or not the vice chair will leave, Philip Jefferson, or whether or not Michael Barr will leave. And so the President Trump could get a lot of seats to fill if they feel that Warsh leaves the Fed in good hands.
Mike McKee, thank you, sir. Just learning this from the Republican senator, who we will speak to directly in about 25 minutes' time. Senator Tillis posting this on social media on Kevin Warsh will oppose the confirmation of any Fed pick. My position hasn't changed. Does go on to say, though, that Warsh is a qualified Fed nominee.
So it's not the person, it's the process. So he's happy, potentially, that this is Kevin Warsh. It is a credible individual. I mean, to be honest, all those people that the president had to choose from were all credible. Just potentially they had different views on monetary policy, notably for Kevin Warsh. The view is, of course, that he's an inflation hawk. But the process cannot happen until the DOJ investigation is wrapped up. And we have no timeline for that, zero.
We'll speak to the man himself at 8:30 Eastern Time. Here's the view on Wall Street this morning. Alex Altman of Barclays writing, I think the market's knee-jerk reaction is that he's a hawk, whereas it's easy to forget that people can change their tune. Every new Fed share gets tested by the market when they come into the seat. Alex joins us now for more. Alex, good morning.
Good morning.
Do you expect this man to be tested?
Absolutely. I think that the status quo is right now, we've got no sign of recession on the horizon, growth is good, but inevitably central bankers get tested during periods of crisis. And so a lot of people hark back to Kevin Warsh how his reactionary function was during the financial crisis. I mean, that was almost 20 years ago. So the behavior that we would expect from someone, any of us 20 years ago versus today, is going to be dramatically different. But yes, I expect him to be tested in the same way that markets tested every single central banker, central banker.
I love this. I really do. I love the sort of attitude coming from Wall Street in terms of you can change. Life isn't necessarily established 18 years ago. I just wonder, do you think that that's what's driving the muted price reaction, or do you think that ultimately this is just a less interest rate sensitive market that really won't necessarily be as Fed dependent until there is a crisis?
I think there's partly that. There's also, as I think other people have already mentioned this ad nauseum, which is it's a committee, so he's still one individual in the committee. And I think the test is really going to be him as a politician, his ability to influence other members of the committee to actually get to the place where, say, the president wants interest rates to be. So there's basically that.
Given the fact that he is somewhat more establishment than some people were speculating or fearing in terms of all of the discussion around Fed independence, do you think that this really reignites some of the faith in the Fed's independence in a way that brings flows back into the dollar?
I think it does. Yeah, I really think that there was a big question mark around this whole de-dollarization, and there were many inputs that were going into that. But ultimately, the Fed question mark was one of them. And I think having someone who sat on the board of governors before, who helped during the financial crisis, is credible on Wall Street. I think actually all of those elements check the boxes that Wall Street needs to see right now.
What if Jay Powell decides to stay on? Does that get a little bit more messy? Who's really the Fed chair then?
I think it's very difficult to make a call on that. I would sort of put that in a very left tail event for the simple fact that it hasn't happened before.
But what would be the market reaction? I'm actually getting more people messaging me saying that they think that this is now a bigger risk.
Well, I think at the end of the day, Jay Powell's being he's worked in the Fed for 14 years or so. He's done 2 terms. If I'm not mistaken, he's got a nice house down in Florida. I think it would be...
With a private equity lifestyle to keep up after not earning the real money for a decade plus?
I mean, the chairman of the Federal Reserve, last time I checked, when he got asked how much money do you make a year sitting in this role, I don't think it's enough to necessarily maintain a retirement lifestyle. So, I personally of the view that it would be very, very unusual for him to stay on.
He's a man of principle, but ultimately he can earn his year's salary in a single speech and some.
Well, this is sort of the promise, right, going forward. Look, I think that this is a key question, and it has to go to the composition of the committee and whether that does change or whether it stays the same, and that ultimately might change the market's response.
Look, I think it would be highly controversial and viewed as highly controversial if the Fed chair stayed on, given that this is a man that once served on the board of governors at the Federal Reserve. Highly controversial, and it would compromise the man himself as well, who's meant to be trying to lead the Federal Reserve.
Especially if, as Alex was talking about, there is this sense that Kevin Warsh as Fed chair is credible and actually imbues the Federal Reserve with a sense of independence. To break with past norm would actually potentially undermine that more than add to it. And I think that that might be a key determination.
At the same time, Jay Powell's legacy was going to be the individual that saw massive inflation and team transitory and didn't get ahead of the hikes quick enough. Now, his legacy is, well, I'm standing up for Fed independence against President Trump. And maybe that could be a reason why he wants to make this a little bit more difficult and he sticks around a little bit longer.
Have you got a favourite trade this morning off the back of this? What are you coming up with the team?
So, I mean, as we've just discussed, from a rates perspective, I mean, you look at SFR Z6, I mean, nothing's really moving that dramatically. Our favourite trade right now is really just twofold. Number one is we're completely in love with the industrial metals and commodities trade, which is obviously unrelated specifically to this. But I would say if you were to summarise January, we've had a lot of noise and not necessarily much signal in terms of thematic trades.
Does this take away some of the romance from that love that you've got for that trade?
I mean, look at the price of silver this morning. But like I said, specifically focus on industrial metals. Our view is very, very simply, and I think we mentioned this last time, is that the US is so deficient in industrial metals. If you're going through a decoupling in China, that's not today's story. That's not yesterday's story. That's a 6, 12, 18-month story. The US needs to build its own strategic reserves of industrial metals to insulate itself against the China decoupling. That is just a very good thematic as far as I'm concerned. And on the back of this, on the wake of it, if we want to sort of talk about specifically this, if we're going back into a stronger dollar view, or at least a dollar stabilization view, should we be back into more pro-quality trades? And within that, we actually think the Mag 7 is interesting again. I mean, obviously, Microsoft was a fire sale yesterday, but then you also had Meta results very strong. Apple overnight was robust. And then obviously we've got Amazon next week as well. So the point being is that the Mag 7 have been used as a funding source, especially in a de-dollarization world, i.e. I need to put money to work elsewhere in the world. But actually, if that dollar stabilization trade comes back in, then actually we think that Mag 7 still delivers that earnings growth and it's a good trade.
Good to see you. Alex, thank you. Thank you, sir. Alex Altman there of Barclays. Let's give you an update on news worldwide with your Bloomberg Brief. Back with us. Here's Yahira. Hey, Yahira.
Hi, John. We start with our top story. It's official. President Donald Trump nominating Kevin Warsh to replace Jay Powell as the chairman of the Federal Reserve. In a post on Truth Social, the president's writing, I have known Kevin for a long period of time and have no doubts that he will go down as one of the great Fed chairmen, maybe the best. Meanwhile, President Donald Trump says he will impose a 50% tariff on aircraft from Canada and decertify all Canadian-made planes until Ottawa agrees to approve certain jets manufactured by Gulfstream Aerospace. The president's also threatening tariffs on Canadian goods if it pursues a trade deal with China. And Elon Musk is trying to consolidate his empire, sources telling us here at Bloomberg. SpaceX is considering a merger with Tesla or XAI. Any deal could attract interest from infrastructure funds and Middle Eastern sovereign investors and may require a large financing component. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you very much. Up next, the Morning Cause Plus. Tobin Marcus of Wolf Research as President Trump names Kevin Warsh as his Fed chair pick.
I think the president had a range of better choices, and he picked the worst one in front of him. His record during the financial crisis, which, just to remind everyone, is horrific, because, I think anyone would know at the time what to have done, and yet he was worried about inflation, even as unemployment was rising. Not exactly what you'd expect to see from the greatest jobs president that God ever invented.
That was some pushback, some real pushback. Pretty aggressive pushback from Neil Dutta of Renmac to the president's pick of Kevin Warsh, the former Fed governor, to take over from Fed Chair Jay Powell and lead this Federal Reserve. Equities at the moment, they're doing okay. It's not a massive move. We're down by 0.4% on the S&P, and the Nasdaq we're down by 0.5 in the bond market. We've talked lots about this move. Yes, the curve is steeper. Yields are up by a basis point or two. They're actually down at the front end. by a single basis point to 354.
Yeah, the biggest conclusion that really one can come to this morning is, as a number of guests have said, this is not a market that is dependent on Fed rate cuts. The Fed is not necessarily in game right now. They are on hold, and maybe rightly so, at least according to the market. So the question is there something that he could say, Kevin Warsh could say, that could potentially upset the apple cart? This ultimately will be the process. And if we get a process, will it go through in terms of confirmation based on some of the obstacles?
We'll spend a lot of time on that in just a moment. For the market at the moment, no drama, down by about 0.4%. That's the price action. Let's get you some morning calls as well. First up, Wolf Research upgrading Broadcom to outperform, saying it can't, quote, ignore its growth and competitiveness. Elsewhere, Raymond James upgrading SanDisk to outperform, citing upside from AI demand and pricing. And finally, JP Morgan raising its price tag on Apple to $325, saying its second quarter margin forecast should reassure investors. Let's turn back to this morning's top story. President Trump picking Kevin Warsh to succeed Jay Powell as the next chair of the Federal Reserve. Warsh will need to be confirmed by the Senate, which may not be an easy process. Jonathan Tamari of Bloomberg Government joins us now for more. Jonathan, we've heard from some key officials from the Senate Banking Committee already this morning. What are they saying?
So just in the last few moments, we've seen a statement of pretty strong support from the chairman of the committee, Tim Scott, out of South Carolina, praising the pick. On the other hand, Elizabeth Warren, who's a member of the committee, as you might expect, is very fired up against the pick and saying that Fed independence is still at stake and that they need a resolution to this federal investigation into Jerome Powell. The biggest voice, as we've discussed, is Senator Tom Tillis of North Carolina. He's a Republican on the committee. He's not running for re-election, so he's got a measure of political independence. And he says he will not support any Fed nominees until that investigation is concluded. He's got the power to basically stop this in the committee until he's satisfied.
Jonathan Tamari down in Washington, D.C. Jonathan, thank you, sir. Tobin Marcus of Wolf Research joins us now to build on that conversation. Tobin, I think for a lot of people this morning, they're concluding it's a matter of when and not if. Is that the right way of thinking about this?
In terms of confirmation, yes, I fully expect that Kevin Warsh will get through eventually. I take Senator Tillis at face value that he's going to need to be satisfied about the resolution of the probe into Chair Powell by D.C. U.S. Attorney Jeanine Pirro before letting anyone get through. So we never really thought there was a big confirmation delta between any of the candidates. You know, if you take Tillis at his word, which I do, and you'll hear from him soon, you need to resolve that before you can get anyone through. Once you do resolve that, I think you could have gotten any of these four shortlisters through.
Tobin, what do you make of the long delay between when we heard we might get the Fed nominee, when we got the Fed nominee, and then the process that is ahead of it? I'm just wondering if the sequencing of this gives any sense of the deliberation that went behind the decision.
Yeah, I think it's been clear that none of the candidates on this short list were checked every box that President Trump had. He's been emphasizing loyalty very strongly, both publicly and in private reports throughout this process. That always made us skeptical that it was going to be Reader. We figured that the two Kevins were still sort of the picks that made the most sense from his perspective, and sure enough, that's where he's landed. But, Warsh is the most hawkish of the people who are in consideration. I think his hawkishness on balance sheet issues in particular, is a straightforward upward pressure on the long end of the yield curve, upward pressure on term premia. That runs counter to what President Trump wants. And I think there's a lot of operational questions about how that's supposed to work anyway in terms of his balance sheet views. So he certainly has drawbacks, but obviously had a lot to recommend him in Trump's eyes. And I think he was sort of chewing over a set of imperfect options.
Tobin, what I understand from my reporting is that the number one question this president has had for everyone, whether it was the first term or the second term, is, will you lower interest rates? That's all he cared about. And this is an individual that was talking about hiking during the financial crisis. What is it that Kevin Warsh said or did that was able to get the Oval Office to basically have faith in him leading the Federal Reserve?
Well, Annmarie, to quote the poets, consistency is the hobgoblin of little minds. The fact that he had that view, that was a long time ago. His views may have authentically evolved. Also, he's obviously just been angling for this job. His stated views about the near-term rate path are that, productivity growth is going to enable strong growth that's still disinflationary in the context of neutral or accommodative rates. And I think that over the near term, he will adhere to that view. I think that's not like a trick that he's pulling on President Trump. The questions are more longer term. If the data doesn't cooperate, if you aren't able to get that robust growth without reacceleration of inflation, how does he react then? How does he react if there's a crisis down the line? And again, what does he try and do from a balance sheet perspective at the longer end of the curve?
He is a credible candidate, and has had a distinguished career. But I have to ask, how much of this is just because Ron Lauder is his father-in-law?
Certainly, I think the family connection cannot be overlooked in terms of why he has always been on the short list, because it is a bit of a curiosity. In terms of his stated views, this is a president, as you said, who's looking first and foremost for someone who is laser focused on rate cuts in the near term. Warsh, if you were just canvassing every, sort of Republican aligned monetary policy thinker and investor and economist in a complete vacuum without knowing the data connection to Trump is not someone who would screen out at the top of that list. So, I do think that connection has helped keep him in the consideration set, both in 2017 and now, and then he's needed to make the substantive case to the president within that process.
Tobin, what do you think this means for Jay Powell now?
This is not the most norm-violating pick that you could have cooked up. So, relative to Hassett, I guess, probably being the person about whom you would have the most concern, it probably somewhat reduces the odds that Powell stays on. I don't think that he's going to clarify what he will do in terms of whether he'll leave after his chairmanship ends anytime soon. So probably from a blocking and tackling perspective, that means that they're going to need to nominate Warsh for Governor Myron's seat, which technically expires tomorrow, but he's indicated he'll stay on pending confirmation of a successor. So, that's the only vacancy that they know they have. I think they probably need to put Warsh there and then see what Powell does down the line. That could mean that they overlap for a few meetings. If he's able to get confirmed fairly quickly, which again probably does mean you wrap down this probe, he could be sitting there for the next two meetings, plausibly, while, as a governor, while Powell is still chair before he takes over the big
tons of ifs here, but Tobin, can we just explore just finally, and I know we've touched on some of this, what would happen if he's not confirmed in time and the chairman does step away, or even if indeed he stays? Who becomes the Fed chair after May?
Yeah, so this would be a real mess. There have been rumors that in that eventuality, the president would try and elevate Waller, someone who's on the board of governors, to be acting chair. There's no real statutory provision to enable that to happen. I think my read of the statute is that it has to be the vice chair, which would be Jefferson in this case. Obviously, that is not an outcome Trump wants. Then you also have this strange curiosity that's come up around some of the conversation about firing Powell, that the FOMC picks its own chair, separate from other statutory provisions, determine who's the chair of the Fed Board of Governors. So that all gets very messy very fast. I don't think we're going to end up in that outcome. To me, the fact that that is such an opaque mess is all the more reason for Trump to pull the plug on the Ferro probe sooner rather than later, assuming that he can't get Tillis to back down, which I don't think he will.
Let's hope we can avoid that. Thank you, sir. Tobin Marcus there of Wolf Research. Up next on the programme, we'll speak to the man himself, Senator Tom Tillis, weighing in as President Trump nominates Kevin Warsh to lead the Fed. Live from New York City this morning. Good morning to you all, and what a morning so far. Equity futures on the S&P negative by 0.4%. On the Nasdaq, we're down by 0.54. On the Russell, some underperformance here, outperforming for the month of January, but underperforming on the session. We're down by 1 full percentage point. In the bond market, bond yields are a little bit higher at the long end of the curve. No real drama though, up a basis point on 10s, on 30s, up by 2. Some economic data about across. Let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. Well, the producer price index for December, a little late, but coming out now, up 0.5% for the final demand numbers. That's significantly more than the 0.2 that was expected on a year-over-year basis, keeps the PPI headline number at 3%. Ex-food and energy, the core is up 0.7 for the month. That is much more than the 2% that was expected, and the flat 0.0 reading last month. And then take out trade services, and you have a 3.5% increase on a year-over-year basis, which is stronger, which is the same as it was in the last month. Now, these numbers are important because these are the last ingredients to go into the calculations for the PCE. And Jay Powell said on Wednesday that the Fed had figured out that core PCE was going to be 3 to 3.1% because of what they'd gotten in the CPI. This may even push that a little bit higher. 0.7% advance in the index for services is what pushed up prices for the headline number this time, and that's kind of the opposite of the story that Powell was telling us on Wednesday, that it was goods that were driving inflation and services were dropping. The core is it was up basically because we got not just services, but we also saw some demand for other services go higher than anticipated. So anyway, I suppose now the question is, what does Kevin Warsh think of all this? And I know you've got Senator Tillis there, and you could ask him what the price of snow shovels in North Carolina is going to be this weekend.
I imagine the price of those has gone up, Mike, without a doubt. Michael McKee, thank you, sir. The senator standing by. Let's get to him right now. Senator Tom Tillis from North Carolina joins us more for more. Senator, welcome to the program. So you had been vowing to block any nomination to the Federal Reserve until the DOJ wraps up its investigation. We have some news this morning. As you know, Kevin Warsh has been nominated by the President of the United States to succeed Chairman Powell. Does it change anything for you, sir?
No, it doesn't. I am pleased with the nominee. I think that by most accounts he's well regarded, but we still have to clear the current matter. Look, they're pursuing on the basis of criminal intent testimony in a banking committee hearing that clearly had no criminal intent. So to me, you got some assistant U.S. attorney with a dream in the D.C. District that should really determine whether or not this frivolous prosecution is worth holding up a Fed board seat.
Senator, we have some time between now and May for that investigation to go away and for the confirmation process to open up. Have you given thought to what would happen if we don't have that time? We get to May, this is still lingering, and the chairman steps away. What happens to the top of the Federal Reserve?
Well, I think that we all need to understand we still have a working quorum of members. Whether or not they have an acting chair is a decision that the president and I assume the Treasury Secretary and others can look at. But that's not my problem. We're here because of them. We're not here because of me. And so I think they should work expeditiously if they really do. I'm not an attorney. I watch a lot of crime shows, but it doesn't look like there was any criminal intent here. They have to determine whether or not it's worth grinding this out. Like I said, I didn't put us here. Some assistant U.S. attorney in D.C. district decided to put us here, and they've got to determine if they have a case that's worth pursuing.
Senator Tillis, has anyone from the administration or the Department of Justice reached out to you about the process of how this could go down, or giving you confidence that this will be dropped in time for the confirmation hearing to go forward?
Well, Lisa, I never talk about my conversations with any members. People always ask me what goes on at lunch. I just don't have those conversations, but my public statements stand for themselves.
Is closing the investigation enough, Senator, or do you need other assurances that you think this administration is going to respect the Fed independence?
Well, right now, I think you do that by making a judgment. Look, we've got two cases here, right? We've got the Cook case and we have the Powell case. Both of those, to me, are instances of trying to undermine the credibility of the Fed independence, and I'm staying focused on that one goal. I'm not really persuaded or even willing to entertain any discussions that take me off that goal.
Okay, but you just mentioned the Lisa Cook case. Do you also need to see that wrapped up either by the Supreme Court in order to move forward?
Yeah, I do. I mean, because look, I mean, we're talking about what looks like a paperwork error, or if there was a mistake long before she was confirmed for the board. It's like, my goodness, guys. I mean, I don't know. Maybe Pulte or somebody thought that was cute. I didn't.
So just to be clear, it is not just the DOJ investigation to the Fed that you need wrapped up. You also need the Supreme Court case wrapped up. So that's two issues right now and blocks for you to move forward with Kevin Warsh.
Yeah, well, no, let me bifurcate these. One is moving forward with another, the case that will prevent me considering any board nominee is the Powell case. But I will not move forward for the Fed chair, which we know expires in February. The other case, we have, the Myron term is about to expire because he was filling basically 6 weeks, or I'm sorry, 6 months. We've got the Cook seat. Those are ones that are really going to be I'll take a look at the candidate. I'll take a look at how it would affect the board. Look, this is all, in my opinion, this is all about sending a signal to the markets and to the business community that Fed independence is critically important. And going after the chair, I think, took a stool out of the foundation of people's confidence, or a leg out of the stool. In the case of Cook, I do believe that it's another example of a trend, and the Senate has to stand in the breach. We have to make sure that the Fed maintains its independence, and we cannot reward any bad behavior that seems like it's purely motivated, not by the substance of the allegations, but by the interest in trying to undermine the Fed independence.
Senator, what's your understanding as to whether the Federal Reserve is cooperating with that investigation? Some conflicting reports over the past few days. What's your read on the situation?
I'm not really sure, Jonathan. I'm going to leave that. That's a better question to ask the administration or the DOJ.
Well, if we get the opportunity to speak to them, I'm sure we'll ask. I've got the opportunity to ask you about the man and not just the process. You said this morning, and you've said it again, that Kevin Warsh is a qualified nominee with a deep understanding of monetary policy. For those familiar with Kevin Warsh and his time at the Federal Reserve back in the financial crisis, they have considered him to be on the more hawkish side of the spectrum on the FOMC. And there is some debate this morning, Senator, about what Kevin Warsh actually stands for, given that we know the president wants lower interest rates. What's your understanding of what he stands for?
Well, with Chair Powell, I haven't agreed with all of his opinions. I'm not an economist or his positions, and sometimes I may be more hawkish than Chair Powell. So coming in, I think Walsh is a good independent. He's got an extraordinary reputation in a community of economists and people focused on the Fed. I don't think that he would want to destroy his reputation by being independent. You could have hawkish members like Waller and others, and I'm fine with them on the board to stretch the thinking. But I don't believe he comes in as more or less going to do the bidding of the administration, which is critically important. And incidentally, I should say it's critically important for the health and hygiene of the administration.
Senator Tillis, does this give you any more confidence that actually the independence of the Federal Reserve will not be undermined, that this actually is going to be a proper process once some of the roadblocks that you're talking about are going to be cleared?
Yeah, I think so, Lisa. And look, this is actually democracy and institutional separation at its finest. We have a disagreement, and we have a mechanism in place for resolving this and moving on. I hope that no one in the administration takes personal offense to this. I'm doing my job.
Senator, do you have any understanding of the timeline?
Well, the investigations can go on forever. I mean, you could see one scenario where Chair Powell has 2 years left on his term, even after he comes off the board. So, I mean, you could see this going on for 2 years, or in my case, 339 days.
Because 339 days, that's when you're going to be retiring. And I know Lisa asked you if you had any conversations. I want to ask you about those conversations, but have you seen any indications from anyone that they do want to wrap up the DOJ investigation as soon as possible?
Well, I think, Annmarie, I think that the fact that they're putting forward this nominee, knowing that it would be impossible to get him through with the current position that I've taken, it suggests to me that maybe they are trying to find a way to deal with this. It could be adjudicated expeditiously, or it could be just determining that they also agree that there was no criminal intent in the chair's testimony in the banking committee that I participated in.
Senator, just quickly, have you spoken to the White House? Have they reached out?
Like I said, I have ongoing discussions. So the president and I probably communicate once or twice a week, at least through text. So I have ongoing discussions. I'm not going to talk about the content of them, Jonathan. Kind of like Groundhog Day. I'm going to answer the same question every day the same way.
It's a good movie, I heard.
Senator, we appreciate your time. Thanks for jumping on the call. Thank you, sir.
Right.
Thank you very much. Senator Tom Tillis there, on his way to the gym. The senator made me watch Groundhog Day in the last week.
But we heard about that just
I know. That's what that joke is about.
Elaborate on that.
I'm aware. Let's talk about the content of the conversation if we can.
Of course, and his content of his workout, which is actually really impressive.
It sounds like it's going to take a while to get this done.
Yeah.
Unless this investigation goes away.
But if the investigation goes away, it sounds like there is a vote on the part of Tom Tillis for Fed Chair Kevin Warsh. And I think that that's interesting because he really supported the integrity of this person and said that he does think that he gives a sense of independence to this Federal Reserve.
Right. It's not about Kevin Warsh. It's about the process. That last comment there about him and Trump communicating at least once a week, ongoing talks. I think potentially there could be an off-ramp and this DOJ investigation goes away and this could become a lot clearer. Potentially. But at the same time, Senator Tillis is making it very clear he will not move until it does go away. So that's 339 days.
Sure.
Or it goes away.
Based on what we all heard there, a matter of when and not if. And I think that's important. And it means that, yes, things could get messy and we can park that because we've got no idea how that plays out. And we could focus on Kevin Warsh, the man himself, and what he stands for. Because this morning, I think the big takeaway from everybody on Wall Street is there is no real consensus on what Kevin Warsh stands for and how he will vote once he gets on this committee.
That alone is giving a support, though, to the dollar. And I think that that's really notable, that it couldn't have been, it wasn't necessarily some of the picks that would be thought to be simply doing President Trump's bidding. It's this idea that we heard from Senator Tillis that on the margins, this actually does imbue a bit more sense of independence to this Federal Reserve. And I think that that's what the market is picking up. I wonder how far this dollar trade's going to go.
And the Lisa Cook chair. That seat, he's not moving forward until the Supreme Court has a ruling on that. So actually, it's a lot of musical chairs right now when it comes to the Federal Reserve.
A lot of moving parts, that's for sure. Equity so far negative by 0.5% on the S&P 500. Lots of news elsewhere. Let's get you an update on that and more with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Exactly, John. Recapping the inflation data we got moments ago, overshadowed by that Warsh news. But producer prices coming in hotter than expected in December, rising 3% year over year compared to estimates of 2.8%. Month over month data was also hotter than expected, rising 0.5% after a 0.2 gain the prior month. Meanwhile, our top story, President Donald Trump nominating former Fed Governor Kevin Warsh to replace Jay Powell as chair of the central bank in a post on Truth Social. The president's writing, "I have known Kevin for a long time and have no doubt he will go down as one of the great Fed chairmen." And President Trump saying he successfully appealed to Russia's Vladimir Putin to halt strikes on Kyiv and other Ukrainian cities for a week. The move comes as Ukraine faces severe cold and power shortages due to damaged infrastructure from recent Russian attacks. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. Up next on the program, Lindsay Piegza of Stifel as Kevin Warsh gets the nod from President Trump to lead the Federal Reserve. Plus, Yahara comes back with your morning movers, Exxon and Chevron, trading lower following earnings.
I expect him to be tested in the same way that markets tested every single central banker. It's a committee, so he's still one individual on the committee. And I think the test is really going to be him as a politician, his ability to influence other members of the committee to actually get to the place where, say, the president wants interest rates to be.
That was Alex Ullman of Barclays on the big news this morning. The president nominating the former Fed Governor Kevin Warsh as his big pick to lead the Federal Reserve. As we count you down to the opening bell, equity futures negative by 0.4%. We're down 0.6 on the Nasdaq. On the Russell, we're down by 1 full percentage point. With your morning movers, with more, here's Yahara. Hey, Yahara.
Hi, John. There was a lot of anticipation going into the earnings of Exxon and Chevron due to sliding oil prices plus Venezuela, and we got them. The both stocks are weaker. Exxon down 1.2%, despite both companies beating estimates. And I want to bring you some news from our energy team this morning about Chevron, saying that it will fund operations in Venezuela using cash from oil sales, not committing new capital to the country. Meanwhile, Tesla bucking the Mag 7 weakness. Shares are up nearly 1.8% in the pre-market. On our scoop that SpaceX may merge with Tesla or potentially merge with Musk's XAI ahead of an IPO. This comes after a dramatic shift announced this week by Elon Musk, reshuffling factory lines in order to have Tesla focus more on robotics, AI, and autonomous technology. And we end on SanDisk, those shares soaring more than 20% in the pre-market after a blowout quarter. The AI build-out has transformed this company from a highly cyclical business. Now customers want to lock in orders, want to lock in multi multi-year orders instead of going quarter to quarter because the demand for memory chips is just off the charts. John?
That move, just explosive, up another 22%. Yahara, thank you. Thanks for this morning. Great work. As we count you down to the opening bell, here's the trading diary for today and the week ahead. The government funding deadline, of course, later on. Plus, Fed speak from Muslim and Bowman. Monday, ISM manufacturing data and earnings from Disney. On Tuesday, jobs data and results from Pfizer, Pepsi and AMD. The payrolls report not too far away. We've got Alphabet earnings on Wednesday, I think, Amazon on Thursday. Got a stacked week coming up.
Yeah, and all the oxygen is being sucked out of the room by what will Kevin Warsh think of all of this? I mean, ultimately, right? I mean, you think about how much is going on right now and how much we've gotten overnight with respect to Apple and over the week with respect to other big tech earnings. We've got PPI exceeding expectations. Oh my gosh, inflation, markets. What does Kevin Warsh think?
Also, payrolls next Friday, asterisk. We think payrolls next Friday, most likely payrolls next Friday, but we are going to have,
Don't do that.
We're going to probably have, they're not going to make this deadline tonight, I don't think.
Yeah, but it'll be done by Monday.
Maybe.
Just make it go away.
Please, make it go away.
Maybe.
Oh, God, why are we doing this?
It might be short, but you don't know.
So let's turn back to our top story. What does Kevin Warsh think? Right?
That's exactly what it is.
Lindsay Piegs of Stifel joins us now for more. Lindsay, welcome to the program. Who is Kevin Warsh? What does he stand for? People are familiar with his resume. Who is the man when he starts to lead the Federal Reserve?
Well, you're right. The market is familiar with him, which is certainly a plus for the nominee. He spent many years at the Fed, including time during the financial crisis, acting really as the primary liaison, if you remember, between the Fed and Wall Street. So again, investors know him. They're comfortable with him. He's also said to approach policy in a very calm and methodical manner, so giving investors further confidence in his ability. He also has a very unique background, spanning across the spectrum from academia to politics to finance. Now, he was known as an inflation hawk during his time on the board, but more recently he has shifted his position, calling for a new regime at the Fed and notably lower rates. So at least for the administration now, he does seem to be checking all the boxes. But at a time when the Fed's independence is being questioned, I wonder if this is going to further muddy those waters.
Why do you say that, Lindsay? At a certain point, if this is somebody who is established and who has a track record in academia and at the Federal Reserve, why would it muddy the waters of independence?
Well, I think it's because he was known to be an inflation hawk. And again, the change in his position. Now, of course, times change, positions can change, but the timing of his shift in his commentary, calling for lower rates, in line with the president's push for lower rates while inflation is still elevated. And as we saw this morning in the PPI, reversing course with a reacceleration, it may raise some questions about whether or not there is some political influence over the chairman. Now, keep in mind that the chairman always has one vote, just like other members of the committee. But the chairman does have a very persuasive tone, if you will, over the direction and the analysis of the appropriate pathway for policy going forward. So this is a very monumental decision.
Atlanta Fed President Raphael Bostic has been speaking over the past few minutes, and he's been talking about how, exactly to your point, ultimately this is a committee of 12 people and it requires 12 votes. Also saying that at this point we still have a ways to go on inflation and we need to be vigilant. I know you agree with that, Lindsay. What does that mean in terms of the path ahead that you think would be necessary to really get this economy back into balance?
Well, I think at a bare minimum, we do expect the Fed to remain on the sideline now for an extended period of time, given the still elevated level of inflation and the solid nature of the underlying economy. We're talking about over a 4% growth rate in the third quarter and potentially even stronger growth as we await that fourth quarter number. So again, base case, the Fed's on the sidelines. But if we really want to talk about tackling inflation, with the Fed having stopped short of a sufficiently restrictive level back at 5.5%, the Fed may need to talk about additional rate hikes should inflation continue to accelerate and potentially push closer to 4% later in the year. Now, again, that's not our base case scenario, but the Fed does have to be ready to shift gears if inflation does continue to push further away from that 2% target.
Not your base case, but you could see that being a potential scenario at some point this year?
Not necessarily this year. If we do see inflation continue to get hotter than expected, that could lead the Fed to at least begin to talk about shifting positions. But remember, this has been a Fed that has been very tolerant of inflation above that 2% target for quite some time. So as we saw in this morning's PPI shifting above 3%, that's not going to be enough to move the needle. We would have to see consistent upward momentum away from the 2% target, further towards 4% or beyond, before I think the Fed would be willing to shift gears.
Lindsay, appreciate your time as always. Lindsay Piexer of Stifel, we're all having the same conversation right now. What kind of leader will Kevin Warsh be once, if he's confirmed and leads this committee at the Federal Reserve? This from Blake Gwynn of RBC, publishing just moments ago. It's not necessarily that instructive to look at Warsh's past statements or behaviour as an indicator of what he will do as chair.
Yeah, this is a Wall Street that is very forgiving. They say, just your past performance does not determine future performance. And we're taking that to heart. I will say I'm laughing a little bit because Blake Gwynn also said, you're hired, asterisk, pending Senate confirmation. The finale of The Apprentice, Fed Chair Edition, aired today with Trump officially announcing that he was nominating Kevin Warsh. What I find interesting is how much oxygen Kevin Warsh is taking out of the room. And the fact that markets aren't moving that much indicates the Fed's in the backseat when it comes to what's driving this market. Now we've got to look at other things.
Lisa, you nailed it earlier in the program. Will the real Kevin Warsh please stand up? We don't know who he is. We really don't know his beliefs now because he's sweet seesawing.
We're going to have a weekend full of this, aren't we? And another week after that.
It's going to be really
But your
fun.
final point's the important point. So much of this market recently has been driven by something else and not the rate story.
Right now, we're all attuned to the Fed of 2009. This is a different Fed in a very different moment where they're not necessarily as relevant.
Live from New York City this morning. Good morning. This was Bloomberg Surveillance.
The women's semi-finals at the Australian Open. Aryna Sabalenka took out Alina Svitolina in straight sets to reach her fourth consecutive championship match down under. She'll face Alina Rybakina for the title after she survived a late rally from Jessica Pegula to reach her fourth final at the majors. And don't forget, TC Live will keep you up to date daily.